Good morning, everybody. Welcome back to another episode of The Market Open. It is Monday, September 9th, 8:46 a.m., and we are back once again to analyze and break down the global capital equity markets. I hope everyone had a good weekend. It's time to get started back into the grind on a Monday morning, and this week is going to be very important. First of all, today is the first day post S&P inclusion news for Palantir. We will officially be included in the index along with Erie Indemnity and Dell Technologies on September 20th. But we have officially joined the index as of Friday, and the stock is going to be a very interesting open today because we're going to see how the market interprets the news. Obviously, the news is very bullish. We'll talk more about that. But what does the market say in the face of a macro that is not holding up too well, at least so far seasonally in the month of September? On top of that, not only did we get into the S&P 500, this morning, we get a big deal, like a big partnership. That'll be our first segment of the day, going through that partnership with Palantir. Folks, they are on the S-curve of growth. It is just that simple. They are on the S-curve of growth. They signed a 5-year extension with BP, one of the largest oil and gas companies on the planet. One of Palantir's earliest clients, that Matt Babin, the head of Palantir Energy, was on our show last week, and he said that BP was an exclusive client for them for a decade, and that was a little annoying for them because they couldn't expand, but it gave them so much time to learn and grow and figure out how to deliver value and alpha in the oil and gas industry. And now BP just signed a 5-year extension with AIP. And that's really important because it means that AIP is starting to become monetized. So we'll talk about that. And then finally, we got a macro that's holding up not too crazily. I know I said the macro is kind of bad in September, but at least for today, we are on track to have one of the first green days for the S&P 500 in September. Bitcoin right here, 55,236, not too bad. Look at the S&P. Up about a little bit more than 0.5% in the pre-markets after having a nasty week where it was down about 4% for the week. We went from 564 on September 3rd, literally basically all-time highs, down to 537. Now we're at 543. Robinhood up about 1.27%. You got Dell up 4.8%. Snowflake's up a little bit. QQQ, the Nasdaq's up about 1%. Nvidia up almost 1%. Coinbase up 2.3% because Bitcoin's up. MicroStrategy's up. CleanSpark is up. PayPal, they announced a new partnership with Shopify today. We'll talk about that. They're up as well. And then you've got Palantir, which overnight on Robinhood did hit $33.40. I think that was the high on the overnight trading. Had about 300,000 shares of volume, not too much volume, but still it showed that the buy side pressure was there. Right now it's at 32.93, 1.57 million shares of volumes. I have no clue if it sells off on the open or if it pumps. If I had to guess, I think we go higher. The market's up right now in the pre-market. That could obviously change when the market opens, but I also think the deal we got today, along with the actual compounding effect of getting included into the S&P 500 and people trying to front run that news before it happens, I think people will become excited. You guys are saying there's a little bit of a lag. It looks good on my front. There's no issue here. Stream froze. Wow, that's weird. Let me check my phone real quick. If anything, refresh. I think that should hopefully help. Yeah, on my phone, it's fine. Yeah, I didn't see any lag at all. Huh, weird. Okay, should be good. If anything, refresh, and I think that should make it better. It was just for a second. Okay, cool. We're back. Awesome. So, yeah, let's get into this deal. So for those that are just joining, that'll be our first segment for the day. Then we'll get into a ton of macro stuff because obviously this week is going to be one of the most important weeks. This is the final week before the Fed talks and gives us a decision on 50 or 25 bips. So we got a lot to analyze. Also, at 10:30, remember that CEO I told you guys about that was going to join the show? Either 10:30 or 10:45. He'll be on live on the show, and we'll get to talk to him for 30 minutes. I think you guys will find it very interesting, some of the stuff that he has to say, because his company is a pretty important company in the financial universe, was a very important company in 2022, 2023, when we were all confused about a certain subject. And he's going to shed some light on it and help us understand a little bit more. So that's what we're going to have later throughout the show. All right. Palantir, 5-year extension with one of the earliest commercial clients they ever had, BP, to implement AIP throughout the entire company. So on Friday, we get into the S&P 500, pretty big news. Today, a couple days after that, Palantir announced that one of the clients they work with to build out their commercial business to the point where they could even be recognized to get into the S&P 500, kind of comes full circle, has enough confidence in them to extend their partnership for another 5 years. BP is one of the largest oil companies on the planet with a market cap of $87 billion. Couple quotes from the press release. Palantir's AIP software will assist BP to safely and reliably harness large language models to improve and accelerate human decision-making with suggested courses of action based on the automated analysis of the underlying data. So obviously there's going to be a ton of interaction between Palantir and BP from an LLM perspective as AIP starts to make its way into the organization. Another couple quotes I just want to read before getting into a little bit more analysis. Within the software, the robustness of the underlying data infrastructure and digital twin are combined with tools to ensure transparency into AI-based recommendations. This means that the software is designed to enable safe and reliable AI deployment and guard against hallucinations. Meanwhile, security features control what LLMs can and cannot do with fully auditable digital records of any decisions or actions. So AIP was launched a year ago. We are now beginning to see the true monetization and potential of AIP. For everyone saying, when are they going to monetize? I think the reacceleration of growth, and I think we're going to hit 30% growth in Q3. I think this is the realization of that monetization that's starting to happen now. If one of Palantir's earliest clients is ready to go on this AIP journey and say, hey, we're with you for the next 5 years, then I think the platform is not only adding value, it's beginning to change how these enterprises think about AI. And this is why Palantir is getting a premium from the market. They are compounding the notion that they are an actual AI SaaS. And that's why they're continuously getting the premium from companies like Snowflake or AI, where I think money is leaving and going into Palantir. Now, this deal also follows multi-year extensions with Sampo and Tampa General. So we're seeing multiple companies that have worked with Palantir in the past. Also, Eaton had a multi-year extension with Palantir. They're deciding to choose to continue working with Palantir, specifically with AIP. Matt Babin, we talked to him last week on the channel. He said, going forward, our objectives together remain the same, further enhancing the efficiency of BP's operation while increasing data integration. Now, AIP offers the opportunity to help accelerate human decision-making on top of the robust digital twin and deep operational workflows already in place. Matt Babin is the head of Palantir Energy, so it makes sense that he feels that this partnership with the BP is only going to get stronger. Couple clips, and then we'll move on from Palantir. This is the former CEO of BP, Bob Dudley, talking about why they chose to begin working with Palantir about 10 years ago.
We had a number of problems in BP for a while. In the early part of the last decade, BP stood for big problems. We were dealing with the Gulf of Mexico spill and had issues. We had legal issues, and I won't go into that, but unbelievable. That's what opened up my eyes. Unbelievable ability to see data from all different directions, put it quickly, like within days, and visualize it. We realized how big our problems were at that point. But then I thought, this is amazing, because I used to be a production engineer in the North Sea. And I remember what it was like. You had your well file, and there was a geologist down the way, and it was offshore equipment data, 20 years of history on a well. I said, Alex, do you think your team could maybe simplify this process? So 2 intrepid Palantir people came in. I think they worked the weekend and came in, and they put this into some program you have. That the engineers, and the geologists, and offshore were just amazed.
Okay, so that was Bob Dudley talking about working with Palantir. Guys, in terms of the lag, I have an iPad playing right in front of me. I see no lag on the iPad, and same thing with my other desktop. So it's weird that's lag. I'm telling you, it's not my internet. If it was my internet, I would see a Wi-Fi signal show like less bars of strength on the Wi-Fi. I'm not seeing that at all. So maybe it is me, but I'm not seeing it on my end. So if it is lagging, I'm sorry about that. Just refresh. Hopefully that solves. And then one more clip from Karp talking about why organizations like BP are getting value from Palantir in oil and gas industry.
That was like a phase where data, like oil and gas, is the processing of it, and processing of it has to happen according to norms. And then you have an output. And now we're moving into a phase where that processing of the data is going to be done with algorithms. And you have lots of issues around that. So, you know, what's the handoff function for an algorithm? When is the algorithm deciding? When does a human decide? How do institutions that are regulated, like every institution, come to terms with that? And now we're moving into kind of from useless to political changing to potentially dominant. So the institutions, and we've seen this in the Ukraine war, we see this in innovative industries like BP, but the institutions that actually can implement tech and now can interact with tech that implements itself. So more AI generating code, AI generating algorithms in the context of norms are the institutions that win. So it went from joke to cosmetic to changing your life without you realizing.
So there you go. Thank you for this, TJ. He says Down Detector is reporting some issues with major internet providers and YouTube. Okay, so that might be some of the issue. Yeah, because I would really see if it was my signal, and then I would be like, all right, it's me, but it doesn't seem like it is me. But you guys said the lag was only 2 seconds, so that's good. Well, there you go. It seems pretty obvious why BP continued to sign up for this deal with Palantir. I think it makes a lot of sense. It's nice that they're putting out this announcement, but after the S&P 500 news. So S&P 500 was a big piece of news. I did a video on that yesterday. Went through for 20 minutes all my thoughts about why that matters. But the more compounding deals that we get after the S&P 500 news just continues to reinforce the S-curve that I believe Palantir is on. And that's why it's really fun to kind of see how Palantir continues to grow. 32.90 in the pre-markets. Again, 9:30 is going to be very interesting to kind of see how this thing plays out. I would imagine 33 is not that crazy to get if the macro holds up. Would it be sold off in a couple of days? Maybe. Does it maintain its pump to 35? Maybe as well. But you can't blame Palantir at this point. They're putting up the deals. They're putting up the S&P 500 news. So really, it's a question of the macro. And even if it falls back to 29, still up 75% year to date. At this point, if it goes to 33, it's going to be up a legit 97% year to date. So either or, we're going to see how it plays out. But exciting stuff. What was the dollar value? There is no dollar value disclosed on stuff like this. Unfortunately, we don't get to know the exact amount of what these deals look like, probably because both companies don't want to unveil that data. But I would imagine, I think BP, I mean, if they work for them for 10 years, BP is probably one of the clients that's paying close to 10 to 20 million a year for Palantir. They're probably in that top 20 clients average customer value that they're getting. So I would imagine this is a very big deal. If it's 5 years and 20 million, there you go, 100 million bucks added to the top line. But I have no clue. I would just imagine that it's a deal that is definitely bring in a decent chunk of change for Palantir. So that's what we got in the context of Palantir. We'll keep going forward with some of that news at 9:30 when we see how the stock opens, but really, really good stuff. Congrats to shareholders. And now we just have to keep going after being included officially into the S&P 500. Okay, Apple. Let's talk a little bit about that, and then we'll get into macro. So Bloomberg put out an article today about Apple, and the Bloomberg news around Apple is not the best. Is Apple down in the pre-market on this news? Let me see. I feel like it is. Yeah. No, it's okay. So it's flat. It's like up a couple cents. The Bloomberg reporter that has been covering Apple for years came out with a report this morning, and he basically said, hey, they're not going to get that super cycle of orders that everyone thinks they're going to get. And that's why market's a little scared right now in the context of Apple. Now, some credit to the chat. A lot of you in the chat, I mean, I did a poll last week and I said, hey, do you think this upgrade super cycle is happening? I think 70% of you were like, nope, this thing's not happening. And one of the biggest Apple reporters seems to agree with you. So he says the delay of Apple's AI features likely means that iPhone 16 won't see a super cycle of orders. Bloomberg writes that Apple will launch Image Playground, which is their like Mid-Journey kind of clone, and Genmoji in iOS 18.2, which is scheduled for release in December. The problem is that was supposed to be coming out on the beta like a month ago. So as a result of that, you're kind of seeing, wait a second, if we are not going to get the exact features that we want from an AI perspective in an upgrade cycle, then maybe we're not necessarily going to see this massive super cycle for orders of iPhone. Now, Bloomberg did say, Mark Gurman, he's the reporter, that Apple probably is going to get this update coming into 2026, not 2025. So he thinks it's a couple of years from now when the iPhone starts to have these massive AI features that everyone's excited about. But he doesn't think it happens this cycle. Now, he might still be wrong. And, you get a ton of people that upgrade. There's just two caveats to this. A, if the consumer really is in a bad situation, I don't think they're in a horrible situation. I have some updated data that I want to show you guys today on that consumer-facing macro issue. Then they might not upgrade, right? Because if they're in a tough situation, they're not going to buy an iPhone. If they're not in a tough situation and the AI features are good enough, then maybe they do upgrade. And then tomorrow is the event. I think it's at like 1 p.m., so 10 a.m. Pacific. If that event really shows off amazing AI features, I would imagine the market gets more excited for something like Apple continuing to show momentum. If it's not that exciting, meaning the features are just not that fun, then I don't think we're going to get that much excitement at the end of the day. And when I mean the features need to be fun, I mean there needs to be such a remarkable use case that the average person can interact with their phone, with Siri, whatever it means, to enable AI-based software as a foundational element of people's daily lives. if you don't get that on the event, like they can't just show a phone that has a bigger screen and a nice camera. Like they just can't at this point. Apple cannot afford to do that. It has to be a software focused event, even though WWDC was like the software. Now you've got to show it in action with the new hardware. And then I think you have a chance to upgrade. But if not, we're going to have to see. I don't think this is the time to get bearish on Apple upgrades. It's today. The event is today. What? I thought the event. Oh shit. I think you guys are right. I don't think this is the time to get bearish on Apple, but I do think it's the time to question, can they really show off the goods when it comes to AI? Oh shit, it is today at 10 a.m. Holy crap. Wow. I'm not going to be able to stream it, guys, because Apple copyrights every stream. So unfortunately, I will not be streaming it, but I'll tweet about it live. All right. Today's the day. So the street's going to have to watch out. Street's going to have to watch out. If they announce something really good, Apple just went red, maybe the street gets excited. If not, Palantir, by the way, 32.93 right now. If not, then, maybe we see a little bit of a sell-off, but we'll see what happens today. To be honest, today can't be the day that people care about too much, because same with WWDC. They fell, I think, 3% after WWDC. Then a week later, they were up like almost 15%. So it's going to take some time for this to play out. Palantir right here, 32.94, trying to crack that 33 in the pre-market. But this event will be important to see, I guess, what AI stuff they've got going on. All right. That'll be today. Sunday says free publicity for Apple, copyright strike. Yeah, I don't know what is wrong with them, dude, but like they legit copyright strike anyone that streams their event. I think they don't want people having commentary on their event. And I'm just like, but the whole point is to let people react to it, get the hype up. So I don't know. It's very weird, but Apple likes to control kind of the narrative on how they put it out. Okay, let's talk into some more macros. So Gene says, what are your thoughts on CPI numbers amid? That's a good question to start off this macro segment. I think CPI comes in cold. I think we get a cold CPI. So oil is up right now a little bit, which is actually good news because you don't want oil to fall that dramatically. But oil right here is at 68, still down decently from that 75 high or 78 high that we had last month. I think energy coming down is going to be good enough to get CPI to come down. I think airline fares are coming down. Apparel's coming down. Medicare is going to come down, or medical health is going to come down. You're going to have auto insurance come down, used cars come down. Shelter, I think, is coming down, but I wouldn't count on it because of the Fed's lagging metrics. Without shelter, again, if you look at something like Truflation, inflation is already at 1.7, 1.8%. So from that perspective, I do think that we are probably going to see a really nice CPI. We'll get the estimates from all the big banks starting in I think like the day before, so tomorrow, because CPI is on Wednesday. But I think most people are going to expect 2.6 to 2.7. My guess would be 2.7. If you look at Truflation right here, their argument is, dude, inflation's at 1.17. And obviously Truflation has been the most accurate source of truth over the past couple years in terms of determining this stuff. But they're looking at an aggregate base of data via their API that's simply more accurate than what the Fed is looking like. That's why Truflation got the reputation that they have. So if inflation really is at 1.17% and the Fed's fund rate is almost 4 times as much as that, or 5 times as much as that, 5.5%, yeah, it is time to start the rate cutting cycle. And we're going to see if those rate cuts can come in. Put in the chat what you guys think. 2.6, 2.7, 2.8. Last time was 2.9. I do not think we're going to be at 2.9 again. I think we're coming down. I think 2.8 is a very conservative, sleep well at night bet. I think 2.7 is a little bit more aggressive. 2.6 would be like a real signal to cut. Now, here's the one interesting thing about CPI. Let's say, so the Fed cuts on the 18th, theoretically, but we know they're going to cut. So far, there's this massive debate about 25 or 50, right? And the idea is, hey, if we do 50, it'll be perceived as like weakness by the Fed, that they lost the fight against unemployment. If you do 25, maybe it's not good enough because the Fed futures are pricing in a lot more aggressive of a rate cutting cycle. What if the way the narrative turns bullish on 50? Because right now, objectively, from what I'm hearing on the equity reports, is that if they do 50, it's bearish. Even Goldman Sachs and JP Morgan said, hey, 50 is kind of bearish because it means the Fed is like admitting they lost. What if CPI comes in so low that 50 turns bullish? Because if CPI, like, let's say it came in at 2%, that's not going to happen, but let's say it came in at some egregiously low number, then the market's just like, okay, this is stupid. Like, there is no reason to be this tight. The only reason the market feels 50 is bearish is because if you cut 50 based on the jobs report we got last week, which wasn't amazing, the Fed's admitting, hey, the labor market's rapidly deteriorating. We need to cut immediately to try to save the labor market. And then that is an obvious sign to the market that, oh, if the Fed thinks that's the case, then we're having a recession. We need to sell off equities, buy bonds, and just like chill out a little bit until things cool off, which will probably put an end to the 2024 rally that we're seeing right now. Unless Inflation is the reason we're cutting, not the labor market. Now, Goolsbee, Bostic, Jay Powell at Jackson Hole, Waller last week, all of them said explicitly the labor market and maximum employment, the dual mandate of the Fed, is how we need to be conceptualizing the next rate cut, which is super fair, meaning we should cut rates based on addressing the labor market. But if inflation comes in ridiculously low, then I think it's not just going to be about the labor market. It's going to be about, wait a second, we cannot have rates this high when inflation is this high or this low, which is a bullish reason to cut. Because at the end of the day, that's not like about protecting the labor market. That's about just saying, hey, we just don't need to be this high given where we were at when it comes to CPI. Now, will CPI come that low to turn the narrative of 25 to 50 to be bullish? I don't know. But if that does happen, I don't think that's the worst thing in the world. Alex says 50 would be bullish. I'm also starting to think 50 is bullish because at the end of the day, if the labor market's starting to cool down, then we just need to get the cutting over with. If we're going to cut aggressively, we might as well cut aggressively. The problem is, again, this market is based on narrative volatility. And if the narrative is 50 is bearish, then, 50 might end up being perceived as bearish. When is CPI? Wednesday, 8:20 or 8:30 a.m. So I'll be live at 8:20 and we'll break down CPI. It's not as important of a number as it was a couple months ago. But it is important. And if we get a good CPI, I think the market will react to that positively. Okay, let's hear from Morgan Stanley, their argument on what the Fed is going to do, 25 or 50, and if they see a soft or hard landing coming up.
Happen on that date?
I think they're going to cut, unsurprisingly. 25 basis points is our call. I know there's a lot of back and forth in markets now between 25 and 50. The last jobs report was fine. It was well above something weak like 100, but well below something strong like 200. And so they're left with this assessment of what's going on. And that's where I think the spending data, which have been pretty solid, come in, and they are going to see the economy as fine, and inflation's coming down pretty notably. So they need to start cutting, but I don't know that they.
And you don't think they look at any of the revisions that took place over the summer and say, you know what, that might even mean that the number we just saw is going to ultimately be revised down as well?
Well, I think they have to look at all of that together. I don't know that the revisions over the summer are going to be what forces your expectations for this revision. It's sort of a funny thing that August often comes in low and gets revised up. And so there's always a bunch of noise in the data. So they're looking at the overall trajectory of things and asking, where is it going?
And then the other big question is, what do you think is going to be on the table in terms of cuts for the rest of the year? Because there is an argument to be made. If you think there's a whole bunch of them coming, you just rip the Band-Aid in September.
I mean, I think that argument is going to have to be made at the table by several people. Whenever there's an FOMC meeting, the staff prepare these documents with at least three different choices for what to do, and one of them has got to be 50 basis points. And I think part of the argument is both. If things are trending down, why not get a little bit ahead of it? But the other part is inflation is now very clearly trending down. Inflation is now not the threat it had been before.
No, it's an employment issue.
Absolutely.
So the question is, you don't think it's that the employment issue is a big issue?
I think Jay Powell has to corral a whole committee, and I think he's got them moving in the right direction. I think he's got them moving for rate cuts. I don't think he's got them all set to start doing much more dramatic cuts.
So when the rest of your firm calls you, trying to figure out what they're supposed to tell their clients, what are you telling them they're supposed to tell their clients about the equity market right now?
Well, that's the tricky part, right? So we're pretty confident. We feel good. We think the economy is fine. We don't think we're headed for a hard landing. And so in that regard, equity markets should relax. I think the tricky part, and if you talk to my colleague, Mike Wilson, right, our equity strategist, he will say the real hard part is where multiples should be. And that's a very different situation from where the economy is going to go in the near term versus where the sentiment is and whether people are rotating into the right sector. And so for us, we feel pretty good on the macro fundamentals. I got to leave it to the equity specialists to think about multiples.
When you think about just play out the rest of the year, though, and the election and everything else, because I want to just understand over the next 12 months where you think rates actually go.
So down from here very much. And we have a whole string of 25 basis point cuts. I think the strategy for the Fed now has to be cut rates substantially, a couple hundred basis points away from where we are so that we're not particularly restrictive. But if the economy holds up, then I think they are going to want to be just slightly shy of their best guess of neutral. So a whole string of rate cuts, trying to put some padding into the economy.
How bad does that mean the employment picture has to get, though?
Well, I think we're already seeing it softening, right? It's come down dramatically. We were getting 300, 400,000. Now we're getting 150 to 200,000. I think it can keep going down from here. And we think the unemployment rate probably drifts up a little bit more, getting closer to 4.5%. But over time, over the next 6-9 months, meaning that it's not a crash, it's just a continued softening.
AKA a soft landing.
Seth, we will see whether all this happens the way you expect it to. We hope it does. Hope it's soft.
So again, you got Morgan Stanley coming out and saying, "Hey, we think unemployment could go up, but we don't think it's some dramatic sell everything, get out of the markets because there's going to be a catastrophic recession." And again, when I read the bearish thought pieces on the market and like the analysis for why you need to sell everything and get out and get to 100% cash, the primary argument is unemployment is going to spike so dramatically that that's going to create a lack of spend from consumers, which then hurts company earnings. And then if company earnings obviously can't keep up, you've got stock prices that are going to reflect to the downside. Again, that narrative could be true. It's just being weighed against a lot of data that we're looking at from different angles on companies that are continuing to put up numbers, aka Nvidia with their growth, aka hyperscalers continuing to spend CapEx. Palantir getting a 5-year deal with BP today. I mean, it's just more and more compounding growth at the end of the day that kind of pushes back a bit against that narrative. In terms of CapEx spend, I did some research over the weekend about understanding CapEx a little bit more because I wanted to know, I mean, Google right now is trading at a pretty aggressive, well, let's talk a little bit about Google right now. Google's trading at below 20 PE. I think it's up a little bit in the pre-market right now. Google's at, yeah, it's up about 0.5% at 151. Google now year to date, Google stock, it was up like 30%. Now it's up 9%, dude. It's up a little bit more than Microsoft, but like big tech has corrected. No one can tell you big tech is massively overvalued. You can make the argument some parts of them are overvalued. Like you can say Apple right now at 220 is overvalued for a 34 PE with zero growth. But to say that big tech is like egregiously overvalued, I don't think so, dude. I mean, we've seen multiples compress, and that's good because the broader market's up, big tech is down. That means money rotated into other assets, not small caps yet. But that's not the worst thing in the world. However, the research I did over the weekend seems like CapEx is not really slowing down. So you had a good post from Joseph Carlson here. He says, Google stock is now at 150, down from a recent high of 190. So we've seen a pretty decent decline in the context of what we're looking at when it comes to Google. The problem I see with Google is that it hasn't grown its free cash flow per share for 2 years now. It's still generating $5 in cash flow per share compared to $5 in 2021. That's a very good point. Given that context, it actually makes sense that Google now trades almost exactly where it did in 2021, split adjusted at 150. If the free cash flow for share doesn't increase or increases, the price should follow. But right now, that's not increasing. Now, you may be asking yourself the question, why is the free cash flow at the same level that it was at almost 3 years ago, although the company has, I believe, since then, almost 2x their revenues and I think 4x their net income? Well, the reason for that is CapEx. They're spending a crap ton of money on CapEx, and it's not cheap. And because they're spending all that money on CapEx, the market right now, at least for Google, maybe for Meta, it's not really giving them the same kind of a sentiment. But for Google, there's a variety of things along with the DOJ antitrust lawsuit thing that starts today, right? Like in a couple hours. But outside of that, the broader argument is, hey, we don't really believe in your CapEx spend yet, so we're not going to reward the share price. The research I did over the weekend, just looking at more interviews of what Sundar has been saying and how the executives have been thinking about AI, I can like confidently say based on that research, and I could be wrong in the next earnings if they start lowering CapEx spend, but it does not look like they are lowering CapEx spend. There was this one quote. I'm gonna misquote exactly what the quote is, but it was a senior exec saying like, we would like give up everything. Then we would rather give up everything we have than lose the AI race to Microsoft. It was in some interview I was reading. And basically that means we are ready to go balls to the wall and continue to keep spending on CapEx. Now, that begs the question, are they still going to spend the $19 billion that they spent last quarter for the next 5 quarters? I don't know. Especially if we get into recession, Google's probably going to cut back on some of that stuff because everyone else is going to cut back. So they're not going to feel that scared that they're cutting back. But it just doesn't look like they're cutting back right now. And if they're not cutting back right now, that's good for NVIDIA. That's good for the broader AI narrative. And that ultimately is good for the thematic that is going to have more money going into the system, fueling what we think for what AI can become. Crossroads says, I think we hit peak AI fatigue next year. AI is real, but it'll take the market some time to sift through what's a real nugget versus fool's gold or dross. I agree. And if that AI fatigue ultimately means that Google is going to stop spending as much as they were spending before, along with Microsoft and Meta, et cetera, then you're going to see a decrease in NVIDIA revenues. The question then becomes, where is the market going to give the AI premium to? And I think we're looking at it today. So far, I believe it's Palantir. And again, Palantir might just be in the juiciest situation of all time, although the stock is, at a 32 price to sales, and I'm not saying that's cheap by any means. The narrative around Palantir is that it's one of the only software AI plays. So when everyone stops spending on CapEx and wants to see ROI from AI, when BP wants to actually implement LLMs into their enterprise, LLMs, again, the thing that everyone's buying these GPUs for to train these LLMs, that's where you get 5-year partnerships like the one we got today with Palantir. So it's going to be really interesting to see how this plays out. In terms of Google, let me know in the chat. Actually, let's do a poll on this one. Let's see if you're bullish or bearish on Google, because there's a lot of chatter in the financial universe on kind of Google's undervaluation. And I don't know, dude. I obviously think it's undervalued, but the narrative with the DOJ stuff and the broader CapEx spend not really giving an ROI yet is the scary part. Here's my big question for everyone who's bullish on Google. The big question, what is going to be the monetization of AI that creates an ROI? So I think there's 2 examples. Obviously, better search advertising. I don't know if that's enough for the market to be like, yep, Google's going to 250. That's the part I'm scared about. Actually, my Google sell was not horrible. I sold it at 140. It ran to 190. If I wouldn't have sold at 190, then I actually sold it at a decent price. I made $1,000. I probably could have made a couple thousand more. But then if it ran to 190, I probably would have been like, you know what? This thing's going to 200. Let me just hold. So I don't know. Maybe I did get out at a decent price back in February when I sold. But the 2 narratives are search advertising will become more efficient. And the second one is their AI workloads will be in more demand, aka GCP growth, cloud growth will increase even further. And that's where you see the AI ROI from all this CapEx spend. But if those 2 things don't play out, then what's next? Like, what is that big, boom, AI ROI that we're going to get for Google? Austin says AI CapEx spend will yield returns for advertising, GCP efficiency, and random AI tools they will offer for free, and Waymo FSD. Yeah, and the random AI tools they offer for free. So, for example, if they make YouTube even more sticky by implementing AI inside of it, and we've already seen different versions of AI in YouTube, then that's good. I don't know if that really grows the top line, but that's definitely good. Waymo FSD, I think, is also the outlier. If Tesla doesn't destroy that, then or Tesla, even competes as much as it's competing, then Waymo FSD might be a good thing. I was on the phone with Steve yesterday. I told him, hey, Waymo's doing 100,000 paid rides a week. He had no idea. So a lot of people don't even know Waymo's Waymo's one of the only guys that's really fueling the self-driving revolution right now, given that Tesla's robotaxis are not fully out there yet. I expect 1010 to be a big event for Tesla. Where's Tesla in the pre-markets right now as well? But AI could be one of those things that helps FSD for Waymo, and that could be Google's ROI because Google owns them. Tesla's up 2.5%. That's not bad, dude. Tesla was up 5% last week. They would have been up 15% if they had not fell 9% on Friday, but getting a little bit rebound here right now at 2.57% as well. We got Chad in the chat. Shout out to Chad. He says Gemini models are underappreciated. Google is putting out a good product. And, this is an interesting point because although I'm not a user of Gemini, and let me know in the chat if anyone's using Gemini on their day-to-day basis, enterprises have an option to use Llama, GPT, and Gemini. And if Google is focusing more of their AI efforts on building out Gemini for the enterprise, meaning it's just more efficient in the enterprise versus some of these other models that we're seeing, maybe there's more enterprise spend. If there's more enterprise spend, there's more enterprise usage of Gemini, which ultimately, as companies pay as they go, then that money is either rented from Google's GPUs or it's paid directly to Google via their AI workloads. And there's a lot of ways that the enterprise Gemini models can scale. But again, the question is that the AI ROI that the market's looking for to give Google a $4 trillion valuation? Right now it's at 1.7. I guess we're going to have to see. 65% of you are bullish on Google. 34% of you are bearish. Okay, so the majority of the chat is still bullish at the end of the day on Google. And look, we use it every day. Google Sheets, email, search. Although I'm using search less, it is still part of our everyday lives. But that's kind of the catch-22 with Google. They have such a monopoly on search that they can't really grow it anymore. If it goes down, it's perceived as bad. It could go up, but then it's just really hard for it to keep going up because of all the different competitors that are there. So they just want to maintain it right now, it seems, versus massively grow it. But if they lose some of that market share, that's where the street starts caring a little bit a little bit more about that. So maybe that's what we're going to look at in the context of where Google goes. Let me know in the chat if you're actively buying Google as well. I know a few of you, like I'm beneficial. He's super bullish on Google, but let me know if you're actively engaging and buying Google. Chat says Gemini endpoint, not their consumer product. Yeah, I would agree with that. It seems like the Gemini endpoint for enterprises is what could be. Like I've always been bullish on Google as an AI play, but it's never been for Gemini because I think Perplexity beat them to that. I think GPT beat them to that. Like Gemini, I've used it before. It's just not as good as the other models on the consumer end. But if it manages and actually can conceptualize enterprise data at scale and handle massive workloads, that's obviously going to pay more than like some random $20 a month that I would pay. And that would be bullish for them. But then the question is, does the street think that's the endpoint ROI that they're getting from all this CapEx? I also think it's a little bit of a black box, ironically, using that term, in terms of what AI ROI is going to be. Palantir right here up about 8% on the day. We got 9 minutes until the market opens. And the reason I say it's a black box is because no one fully knows. Like when I ask people, hey, what's the ROI from all this CapEx? Microsoft, Google, Meta, no one really knows. Everyone says, oh, Copilot or increased ad efficiency and then AI workloads on the cloud. And those are the three most obvious things that the market already knows about. A lot of it's already priced in. What is that one thing, that TikTok of AI, for example, that crazy either consumer or enterprise adoption play on AI that explodes the category itself? Because again, NVIDIA selling these GPUs means nothing. NVIDIA right here up 1.43% unless the hyperscalers find a way to massively monetize all the GPUs they're buying. And that's what the street's waiting on. And I think Q3 is going to be a little dicey because if the street doesn't think the hyperscalers are monetizing efficiently enough, even though I think they should be patient, we might see some more haircuts on valuations. The good thing is, can Google really go to 130? Like, sure, it could, but at that point, it just gets stupid. At that point, I start buying Google. Like, if it goes back to prices it was at in December of 2023, then I think the market has completely, wow. Yeah, Google right here, 151. I think the market has completely decided that they are out of the race. And if the cash flows and net income doesn't, necessarily go down, even if the AI narrative goes down, then I take a stab at it as well. So I think multiples have compressed so much that going into Q3 earnings, a lot of these stocks have nowhere to go but up, unless we have a recession, right? Then all things are off the table and earnings growth will decline and it'll be priced in. But if not, then I think as long as Google basically hits their core numbers, a PE of 19 won't be a PE of 19 for a long time. When you say priced in for the next 6 months or for a year, I would say, yeah, for the next 2 quarters. A lot of some of their core growth is priced in for a lot of these hyperscalers, just given their percentage increases. So Meta's up 50% year to date, or like 45%. I think the market gave them a cool $600 billion in market cap this year. I think the market's pricing in a decent amount of growth for the next 2 quarters. And Zuck's on that earnings call, remember, he said, hey, you got to give us some time. We got to get WhatsApp to 1 billion people in terms of using the AI product. We got to get Meta AI up to 1 billion people. They have about 40 million people using it per week. Like, we've got to get a lot of more usage to really monetize AI. But the street doesn't really know what the monetization of that looks like. Does it look like ads? Does it look like 40 million people paying you $10 a month, which is not going to happen because most of Meta's users are not in America and or North America that has tons of disposable income. So like, what does it look like? No one knows. It's a black box. And until we see what the ROI looks like, I think the market's going to be a little confused. Let's transition to Bitcoin. We got the market open in 6 minutes. Michael Saylor on CNBC today. Let's get his take on where Bitcoin is going and if MSTR has been the best Bitcoin play so far.
Joining us, Michael Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that. But it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy has bought about $8.3 billion worth of Bitcoin. And Bitcoin's up 44% a year on average since then. The S&P is up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us.
The software business is about $400 million a year. I still don't know what the hell MicroStrategy sells. It's like some business intelligence product. I have no idea what customers are actually buying MicroStrategy software. Let me know if you guys have like engaged with it. But yeah, the Bitcoin business is doing the majority of the revenue.
But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity. And then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Has anything changed in terms of you think the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting 1-for-1 performance, paying 25 basis point fee, no yield. When we issue $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made right now? I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious, sir, what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10-to-1 and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this? So, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So
one day, if we tokenize real estate like BlackRock is trying to do, maybe you can sell a token of a New York City apartment. But right now, that's not the case.
There's a short-term panic. Bitcoin is trading really, really hard.
It's supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
So really, what Michael Saylor is saying right there is like, hey, with the S&P 500, you're going to get 12% a year. Maybe with volatility from the VIX that will be, hedging back some of your gains. But with Bitcoin, even with all the volatility, because that's what CNBC is, Andrew Ross Sorkin is asking. He's like, hey, but you have all this volatility. It's all this stuff that can go up and down randomly. And he's like, yeah, but even with that, even with all of it, you're averaging 44% year every single year. And so it's just a question on kind of your entry point. Obviously, MicroStrategy got in pretty early, but that is going to be what determines the long-term potential of Bitcoin and obviously of MicroStrategy stock. All right, folks, we got 15 seconds until the market opens. Palantir right here dumping a little bit in the pre-markets. It was up 8.5. Now it's up 7.8. Let's see how it opens. This is the first day of trading for Palantir post S&P 500 inclusion. It is officially time to see what happens as the market opens. 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Palantir opens up 7.32%. We've got that red candle from the pre-markets because we were up about 8.5%. So we're going to see, can we hold This 32 level, again, 7 million. Wow, 7 million shares of volume within basically 30 seconds. I think there was about 2 million in the pre-market, so you got 5 million right there. That's incredible. $73 billion market cap for Palantir now as we open the markets. I do think there are some traders that are probably front running the S&P inclusion. That's going to happen 2 weeks from now on September 20th. And we're going to see what that looks like now going green right here, up about 8%, 32.74. It would not surprise me if the macro holds up to see Palantir touch 33, maybe make a run for 34, just given there's a lot of attention on the stock. CrowdStrike went up 10% right after they got included. I think SMCI went up 20%. So it's not unusual to see a 10% pump. There you go, 32.84. It's just going to be a question of maintaining some of that momentum. Take a look at that, 32.80. Let me look at the resistant levels. Robinhood opens at 19.11 on the day. $33 has 26,000 shares. 26,000 shares you're looking at 33. That 27,000 that have to be gobbled up in order to get us into that 33 level. Again, overnight trading last night we hit 33,000. Sorry, we hit $33.40. If we hit 33,000 a share, that would be quite exciting. But we got about 30,000 shares waiting at 33 to get there. We'll go back to Palantir in a second. S&P 500 opens up green, up about 1%, 544. Again, it was down 4% last week, one of the worst weeks in 2024. Dell, also included to the S&P 500, up 4.5%. Intel, up 1.2%. QQQ, up about 1% on the day. The tech sell-off last week was pretty bad for the Qs as well, so getting a little bit of a rebound. Coinbase at 151, MicroStrategy at 118, up 4%, CleanSpark up 4%. PayPal announcement with Shopify today. We'll talk about that in a little bit, up 1.66%. Where is SoFi? SoFi is $7.05, up about 0.45% on the day. NVIDIA, nice 3% rain. Oh, wow, 33.20. Holy crap. Holy shit. We just busted through 33. Oh, my God. What a bust. Holy crap, dude. Those 30,000 shares were like just eaten up like in seconds. Wow. Look at that, up 9.25%. Makes sense. It makes sense. There you go. I looked away for 2 seconds and we just busted right through 33. Now it's falling a little bit. It's going to be hard to hold on to it. Yeah, it just went up below 33. But the volume's at 12 million. So the excitement is definitely there. Now we're just going to need to see if people sell when they get their price targets. Wow. It went from 33.30 to 32.98 right back to 33.15. Talk about volatility, dude. You got a lot of people going back and forth on if they should sell, if they should buy. You've probably got hedge funds coming in, traders, algorithms going crazy. But 33.12 is not too bad. For the people that want to sell covered calls, I'm not against selling the covered call. I'm just saying this thing's acting like a rocket ship, and I don't know how much evidence we need to just, chill out a little bit. Look at that, 33.20 on the covered calls. I know the premiums for 35s probably by Friday are going to be great right now. Let's actually check those premiums. But I'm just saying, dude, sometimes it's not worth the stress. Sometimes it's not worth the stress. Yeah, 35 covered calls are paying you 42 cents right now. They're up 250% on the day, which is hilarious. You know what's funny? On Friday, I was thinking of buying $35 calls, and I loaded up 5 of them for September 13th. And I got to the Robinhood part of the checkout. I'm saying checkout like it's a e-commerce store. And I looked at it and I just looked at the cost. I just want to see what it would look like. And I was like, I'm not going to buy it because I don't know what's going to happen. And then I just swipe up by accident. And I'm like, fuck, I just got 5 calls. But then I sold it immediately because I'm like, dude, I don't want to, buy calls that are short-term just based on S&P inclusion if we don't get in. And so I just sold them back. If I held on to them, I think those calls, let me check right now, they'd be up like 30, 40% right now. It was only 5 of them. So it was like $70. It wasn't that big of a deal, but it was one of those things where September 13th. Yeah, they would be up 300%. I paid 17 cents for them. They're worth 50 cents. So I would be up 325%. 33.40. Look at that. Holy shit. Oh my God. Good gracious. They would be up over 200%. Yeah. I sold them because I was a little afraid of the S&P inclusion news. I was like, I just don't know. 33.50. Holy crap. But again, it wasn't a big position. I know some people that loaded up heavy, loaded up very heavy on options. I mean, those $35 calls, let's just look at the open interest right now. 35 calls on Palantir for this week. There are 10,000 of them open. So a decent amount of people thought 35 would be possible this week. Wow, 33.50, dude. That means the resistance right now is at 33.60 now with about 10,000 shares. But look at that, dude. It just pummeled through 33.50, up 10.5% on the day. There's literally no resistance until we get closer to 34, to be honest. At 34, there's 12,000 shares. And if you want to call that resistance, that's not really a wall. That's a little bit of resistance. But from there, there's only a couple thousand shares on every cent, which could be eaten up if the momentum comes in. Shout out to Arnie. He is all in on Palantir. This guy is outperforming the S&P by a lot right now. He is outperforming the S&P by a lot. Amit, your friend has 1.1 million on 11 million. Yeah. So instead of me buying those 5 call options that I then sold simultaneously on Friday for $70, my friend texted me. Let me pull up his exact text. As soon as they got into the S&P 500, he says, "Awesome, I made a quick million." And that's it. It was like, "Awesome, I made a quick million." No emojis, no excitement, no caps lock. I was like, "Yo, congrats." He was like, "Thank you." No excitement, nothing. He was like, "Thanks." Like, fucking bought 370,000 shares at 30, dude. Sometimes big money makes big rewards, but just incredible price action, dude. 33.28. Let me see what else is going on in the market. Then we'll get back to Palantir. Robinhood at 19.19. Airbnb at 116. Carnival Cruise up 2% of the day. Google up 1.6. Netflix at 678. Amazon at 174. Spotify at 326. Shopify 69. They're up 3%, maybe because of that PayPal collaboration potentially helping them. PayPal right here. Just under 70. Apple's down. They're going to have an event in a couple hours on that new iPhone. Nvidia up 3%. Tesla up 3.5%. Market's buying stocks. Robinhood up 1.43%. Market is going a little bit bullish. Look at the S&P, 545. Bitcoin even 55.4. And then Palantir right here settling in at 33.20. If we close above 33, I'll be happy. Obviously 34, 33.50 would be incredible, but just closing above 33 would be super big psychologically for Palantir. Alex says, Amit, so I had a $31 call that I sold. It expired last Friday for Palantir, and I got to keep my shares. Alex, you should be thanking the heavens that your brokerage did not get rid of your shares. Sometimes that happens. I've heard stories that people will sell a call at a strike price that is below where the stock closes, and for some reason, your shares get to stay with you, and they don't get called away. So congrats. You escaped having to lose those shares. I don't know what your average is, Alex, but if you had those shares at an average of like 20 or below, it would have sucked to lose those shares just for a little bit of premium on the covered call. This is why, although the covered calls are tempting today, I get it. I would just be a little cautious on them because you don't want to lose your shares of a really important company because the thing just goes to the moon. Now, you could take the opposite side. You could say, Amit, this is FOMO. Amit, this is all going to, collapse back to 30 or 29 as the macro chills. Amit, this is a lot of retail just bumping in because they're excited about the S&P. I get all those concerns. And I get wanting to capitalize off all those concerns because historically covered calls do very well on Palantir. However, you just never know. And if you just never know, then maybe you want to at least be a little bit more cautious of protecting the shares. That's all. That's all. Some people lost their shares on Friday. Yeah, it is what it is, dude. If you had some of those covered calls expiring on Friday, I'm sorry about that. But, sometimes it is what it is. The good thing is I think the stock is going to do very well over the long term. So, a re-entry at these prices, even though it is at an elevated price. I'm not going to say it's cheap. If you're really in it for the next 10 years, I think it'll be okay. Palantir 33.56. So breaking through 33.50 right now. Yeah, those $35 calls, dude, they must be up a ton. They're literally up 400%, dude. That's incredible. It's absolutely incredible right now. So if you got weekly options, but see, this is my thing. I don't like buying weekly options just as much as I hate selling covered calls sometimes because, you can get burned on them and it's not fun to lose a lot of money. But with a company like Palantir, if things go the right way, the weekly covered calls sometimes can hurt, and buying those calls can sometimes print. 33.60 right now on Palantir. DocuSign's down over 4%. They had earnings last week. Earnings wasn't the best. It was good. It wasn't the best. They missed on guidance, but they beat on the top line in revenue. So they're down about 4% on the day. Palantir now 33.70, folks. It is really pumping. For those that are just joining, we got a BP partnership today with Palantir. I posted about that on Twitter. I'll put the link in the chat so you guys can kind of read the updates. But it was a very big deal. 5-year extension with one of the largest oil and gas companies on the planet. Obviously, BP showing that they have a lot of faith in Palantir. Also, 33.74, it's for AIP. It's not for Foundry or Apollo. So the real monetization of AIP that everyone was worried about, it's starting to happen. And that's really exciting. Oh my God, are we going to go to 34? Oh my goodness. 33.84 right now. Are we about to go to 34? Where's the resistance at 34? At 34, There's 20,000 shares. There's 20,000 shares at 34. If you guys can see that right there, 20,000 shares right at the top, 20,685 at 34. So someone needs to buy up about 700 grand of Palantir at 34 for us to move forward. 33.70, dude, to close above 33.50 would be bullish, bro. That would be bullish. Let's see if we can do it. 33.80, dude. It's doing its thing. It's doing its thing. All right, where's Tesla? Tesla 3.7, Nvidia 3.2, SoFi 1.5, Apple getting sold off before that event today. They're going to have to really show off some good AI stuff for the market to get excited. GoDaddy's up 1.4. They got into the S&P 500 a couple months ago. CrowdStrike, JP Morgan put out a note today. Yeah, CrowdStrike's up because JP Morgan met with some of the execs and they put out a price target of 335. They said, hey, CrowdStrike's fine. There's nothing to worry about. So they're going to have an event in a couple of weeks. We'll see what happens at the event. But based on the meetings they've been having, every equity analyst has basically been saying that they're very transparent, which is what they appreciate. And the fact that they're opening up pretty much all the skeletons in the closet, not holding anything back, not trying to hide anything. That's the way you want to navigate a crisis. And it seems like they're doing that pretty effectively. 33.80 on good old Palantir. Dan Ives has the highest price target on the street at 38. His bull case is 50. I think Bank of America is under him at 30. Argus Research has like 32. There's a couple of others at 35, but they're not as important. Dell right here at 5%, but Dan Ives does have that $38 price target on Palantir. Google 1.4, Tesla 3.8, Nvidia 3.4. Nvidia, I don't know if we see 90s again unless we get a really bad macro sell-off the rest of this month, but hundreds is where I think buyers like want to step in. At that point, you're trading at 25 PE next year, and the market gets a little bit excited for that if Nvidia can put up $5 of earnings. So we'll see, baby. 102, 101 ends up being the short-term bottom for Nvidia. Robinhood 1931 as well. Intel's up 1.14. Where's the semis today? TSM at 161, Qualcomm 162, Broadcom getting a little bit of love. They fell 10% last week. Oh, Oracle, did they have earnings already? They didn't have earnings already. Did they? I didn't see any posts about it. No, it's after the bell. Okay, it's after. Okay, so Oracle's going to be a big one today. I think Oracle's going to crush. I don't know what happens to the stock because the stock is up, I think, 40% this year. So stock has done very well. It might be priced for perfection, but I think they're going to just show up with more remaining performance obligations, more AI workload contracts, more big deals with big names like OpenAI, like they had last quarter. So Oracle's going to be a very important earnings today for the broader AI thematic, and that's going to be what we see later. Rasmus says Palantir's PE is getting horribly high, a bit scary, but we sit and hold for 10 years no matter what. Look, I have a lot of sympathy for that claim. Palantir's PE is 198. Forward PE is 101, and price to sales, which I think is an even better metric than PE, is at 30. It's aggressive. It's absolutely aggressive. I'm not going to disagree with that. It's just, it might be one of those stocks, dude. We've been saying this for 5 months now, so I don't feel like I'm delusionally saying this at this point, because I know sometimes people who are bullish, just their delusional argument to justify the bullishness is, oh, well, it's always going to be expensive. Dude, we've been saying it for 5 months that Palantir just might be an expensive stock. And if it's been expensive for 5 months, then maybe for the next 5 years, it's just going to be expensive. I don't know. Like, I could be wrong on that. And like, we could see a big collapse again. But at this point, that rebound to $20 on August 5th, and then the jump to $29 in the same day, 20 to 29 in the same, it just means so much appetite exists for these shares. There's so much freaking interest in this company, and that's only compounding with S&P 500 inclusion. It's one of those things where you sit back and enjoy the ride, which is why you don't have to worry too much. People are like, do you buy options on Palantir? No, because I can't time it. Neither do I like selling options on Palantir because I can't time it. This is why I don't like buying those weekly calls. I don't like selling the weekly calls. And so maybe just sitting back and enjoying the ride. I do like selling puts though, because worst thing, if you get assigned, then, you know, you just get more shares. It's one of those things where you kind of just wait and see how it plays out. 33.87. Let's see if we can get, to 39. Or sorry, not 39, 34. Resistance is still at 30,000 shares, 29,000 now, 29,000 shares. So it's up from 25,000 at that 34 level. Arnie says, thank you to the CFAs for making me richer. Dude, every CFA in 2022, they couldn't get it. Arnie got it. Arnie on Twitter constantly 2022. Hey guys, this shit is stupid at $8. Every analyst, oh my God, $8 is crazy. Arnie was there saying, you know what? That's not the case. Thomas says Amazon has been overvalued on a PE basis for like 15 years. Yeah, exactly. That's my point. I think that could be a argument for Palantir. Did you sell your options on SoFi? No, I didn't. I still believe the rate cuts will be bullish for SoFi. Hopefully I'm right about that. So not selling those options yet on SoFi. Palantir used to be a Wall Street bet stock. We should get some of them returning back into the stock with all the media on it. Yeah, I think that's possible for the like memishness of it to come back. But if it has some of that meme culture that comes back, I don't think it will be a meme stock because obviously we've seen the execution of the company, but it could perform like a meme stock in terms of the volatility of it. Oh, 34, folks. 34 is here. And that could get Palantir really excited. Congratulations, new 52-week high. It was there for like 2 seconds. Let's see if it gets back there. I think we get back there, dude. I don't think we get there just for 2 seconds. I think we come back. Maybe we just keep pumping. Wow, 34 was quick, dude. I thought it might make us wait till like 10:30. That was quick. It got sold off heavy right at 34, but we did get there. Holy crap, dude. This is fucking awesome. This is great. Hood August metrics released today. No, they don't. No, they don't. They really no, they don't. Hold on. I thought you're lying, bro. I thought they release. Hold on. I thought they release. Holy shit, you're right. Oh crap, we get the August metrics today. Oh my goodness, this is going to be a crazy day. We have Oracle earnings. Palantir is almost at 34. And Robinhood August metric. I thought it was going to be on Wednesday. Holy crap, dude. Oh my God, this is going to be exciting. This is going to be exciting, bro. I think Robinhood put up some huge numbers in August, bro. I think they did. Let's see. All right, 4:05. You guys know where to be. You guys know where to be. This channel, I'll be live at 3:45. At 4:05, we're going to get some big numbers. And we have the Apple event. This is going to be a big day, dude. And we have the Apple event. And in about an hour, I have a CEO coming onto the channel. And we're going to talk about some interesting things. So stay tuned for that in a little bit. Palantir got rejected again at 33.97, back to 33.85. So it's taking a little bit of a hit right here, down 11%. Robinhood is up 2%. Those metrics, the stock doesn't really move on the metrics, but the stock does get the internalized, basically every time they get you get the metrics, you get to know 33% more about the company. So there's 3 months in a quarter. We got the July metrics. Now we get the August metrics. So we're going to know 66% of how Palantir's Q3 earnings are going to turn out to be. And then we don't get the final month. So that means 66% of the numbers get calculated and they get built into the stock, which because their metrics have been so good this whole year, you tend to see a little bit of movement over the next couple of days. So I don't know if we get any movement after hours, but maybe we'll see some movement throughout the week. I will give you the metrics and I will give you the corresponding revenue numbers on the stream today because I already have a model built on Robinhood. And so I pretty much know every number that they get, what that correlates to revenue because I've done like all the proportions of it. So I'll be able to tell you guys what September looks like. And if my guess is that even if September is crappy, and crappy means like just like average, I still think they massively beat. The only thing that's going to suck for them is crypto. Crypto is probably going to be horrible. Those trading volumes are going to suck, but I think options is going to outweigh. I think the deposits, if we have another $4 billion month of deposits, it's going to be crazy. It's going to be crazy. All right, Palantir right here, 33.70. So now it's getting sold off a little bit, but we're holding 33, which is not so bad. Not so bad. Are you streaming Apple? No, because Apple will copyright the stream, so I can't stream Apple, but I'll talk about it on the market close. Are you streaming the debate? I'm not streaming the debate, unfortunately, because I'm going to be traveling on Tuesday, which is tomorrow. So not going to be able to stream the debate. But I'll be tuned in. I'll probably tweet a little bit about it. That's going to be must-see TV. Kamala versus Trump. That's going to be crazy. So we'll see what happens, but I'm not going to be able to stream that. Rocket Lab's up 4% today. Okay. Rocket Lab getting a little bit of a bid. What are some headlines we got going on? So Apple's new iPhone is going to use ARM's next generation chip technology for AI. We know that some of their AI features are delayed, but today they're probably going to announce some of the ARM next-gen AI chips. Morgan Stanley raised their overweight target on ARM, or sorry, they maintained a $175 price target. They switched to overweight. They said, we expect ARM to be a main beneficiary from the pivot to edge AI. You got the Palantir BP news. Eli Lilly, CFO, has appointed Lucas Montres as executive vice president and CFO, so a new guy there as CFO. And what else do we have? Any other headlines? And then JP Morgan maintained CrowdStrike at 330. Oh, Adobe got a 650 price target. Is Adobe up right now? Palantir 3370. Adobe from Evercore ISI 650. Let me know in the chat if you own Adobe at all. Adobe right here, 567, $250 billion market cap. Adobe fell to almost like $400 this year. But let me check. I think it fell below that, right? Year to date. Yeah, sorry, 433. Yeah, so just at that almost 400 level, and then it rebounded. Adobe, you could argue, is one of the better AI SaaS plays because generative AI is a tailwind for them in terms of like Firefly and the programs they have on video editing and all that stuff. But we'll see if their earnings can live up to some momentum as well. ASD FDS, thank you for the super chat. Thanks a lot for converting me to Palantir. I learned a lot from your exciting reporting and took a significant position. Thanks. Thank you for tuning into the channel. I got a lot of messages. I actually called up a bunch of supporters over the weekend. Shout out to Andy. I got to talk to Andy on Saturday night about Palantir. And yeah, a bunch of people that I've been, communicating with over Twitter finally got to get on the phone with them. And it was a pretty big milestone, dude, this weekend. It was, I'm not gonna lie, it was pretty emotional. I showed this on the video yesterday. But for those that haven't watched this video, I saw this on Sunday or on Saturday morning, and this is Ken Bahorsky, who's a guy who works in the steel industry in Detroit. He sent this to me September 2022. Got a nice plaque with the Palantir logo on it, made it with his bare hands in his factory. And I think he was probably bag holding a ton of shares at the time, but he said, you know what, Amit, I really appreciate the content and thank you for doing it. And when you see people, send stuff like that and they care so much about the content and you see how the community is formed and now we're in the S&P 500. So if he held those shares, he's up, 6x on those shares or 5x on those shares. It's just really exciting, dude. It's really, really exciting. And that's why the stock, I think, is continuing to get some momentum. Someone left a comment on that video. I want to read that comment real quick. I was going to post this on Twitter, but the comment was, okay, so the last part of my video, I talked about the community and someone said, journey this, community that, mate. Maybe they're from Australia. You're investing in the stock market, not in a sports team, for fuck's sakes. I get the sentiment, but the problem is everyone who critiques Palantir and says it's a cult and, oh, you're acting like it's a sport team, it's a stock, you're not supposed to be this emotional. Those people think that's a critique. The problem is that's actually the greatest advantage of Palantir. And we've talked about this thesis many times. The cult is the advantage, not just about the stock, but of the company. Again, when I went to AIPCon 3 months ago, when I talked to these employees, they acted like they were in a cult. And that's why you're getting phenomenal results, because they're all aligned on one freaking mission. What is that mission? It's to win. And what are they doing? They're winning. What are shareholders doing? We are winning. So for anyone who's like, oh, this is a cult, it's so cringe. It's like, dude, if you don't like money, you can go somewhere else. Like there's plenty of stocks to go to not make money. You like Walgreens. Walgreens doesn't have a cult. You can go to Walgreens. But I'd rather be in a cult and make some money and, understand how that thesis plays out. Also, by the way, Palantir right here, 33.90. I don't think it's a delusional cult. All right. I've talked about this a lot of times, but the smartest people in the world that I know are invested in this company. And I've heard every single bear case. I've given every single bear case on this channel for 2 years. Arnie, Crossroads, so many people, they've hopped on Palantir Weekly for the past 150 episodes, and we've talked about the bear case. So it's not like we're delusional. Oh my God, stock go up, AMC, GameStop. It's not that type of a cult. It's one of the most sophisticated intellectual cults on the planet with some of the smartest people in the world that are invested in this company. So I think it's a compliment to be a cult. I don't think it's a downside. And a lot of those cult members are getting pretty fucking rich right now. There we go. Palantir 33.70. NVIDIA right here, 105 up 2.4%. Tesla 2.43. And then we got Rocket Lab at 3.8%. I think Palantir is going to chill out in this 33.50 to maybe 33.80 range. Maybe dips below back to 33.20. But you're going to need some decent sell side pressure to get below 33 now that we're in this high 33.70 range. And so let's see if that continues to play out. Amit, you can say the same to that person. How can you cheer for a team, bleed for a team, cry for a team that you don't even play for or own? At least stocks, you have some ownership in a company. Yeah, that's another thing, dude. The people that like cry when the Knicks win a game or something, I'm like, dude, you don't even own any part of the Knicks. Like you don't the only thing you get is the emotion. And that's okay, right? Everyone needs their kind of escape from reality, and sports might be your escape. That's totally fine. But it's not like you're getting richer if the Knicks win or if the Giants win. It's like you're just, you just get the dopamine of it. With a company, at least like you make money. Like at least you improve your life if they win. So I just never understood the argument why people were so against Colts at the end of the day when it comes to stocks. All right, let's see what else we've got going on. What else do we got going on? 33.63 looks like we're going to hold up on that. SMH has had its worst week since March of 2020. This is the semiconductor ETF. They are up 1.53%. They are still up 20% for the year. Again, an ETF being up 20% is not easy to do, but they're up 20%. I think they were up 40% at one point, but they are coming off the worst week since March of 2020. So semis look like they're getting a little bit of a breather. We're not seeing a massive sell-off so far. Now 10:30, usually we tend to get a little bit more pain. So we'll see if the 1030 sell-off continues to exist. But market's getting some love. NVIDIA right here up 2.4%, SMCI up 1.76%, ARM up 3%, Dell up 4.69%, Micron still down on the day. So Micron, one of the weakest of the semis, and then Broadcom up 0.5% right now. Another piece of news is Japan. So Japan's Nikkei index closed 3% down yesterday, and I was really confused. If you were on the Sunday future stream that we do on 7:45 p.m. on Sundays, futures went green at like 8:30, but the Nikkei went down. And I thought the yen carry trade or something was reforming or whatever. Apparently, it was not that. It was Japan missed on their GDP estimates by 0.3%. So the market wanted 3.2. They came in at 2.9. And as soon as that happened, the Nikkei fell 3% and futures went green after futures were red at 6 p.m., likely because people started selling off Japanese equities and buying U.S. equities. Bitcoin also went green. People started selling off Japan and started buying Bitcoin. Bitcoin up 1% right now. It goes to show American innovation is hard to beat. And at the end of the day, if the Japanese economy cannot grow as much as investors want it to grow, people are going to put money back into the United States because there's not that many economies on the planet that are actually growing and innovating at a meaningful scale, even in the face of like the highest interest rates we've seen since 1980. Like, it's kind of insane, but that's what you got going on. So that was some of the updates we had from Japan last night, and obviously helped U.S. equities as well. Someone says, aren't cults delusional or irrational by definition? I think the word you're looking for is devoted or committed. Well, I think cults can be delusional and irrational, but I don't think they have to be. You know, I think if you're part of a cult, to me, it's not about being delusional or irrational. That can happen. It's more so about being aligned around a mission. And if that mission is about Western values or implementing AI in the enterprise or like building out a sophisticated culture of transforming enterprises with software, I think there's so many different missions that people are aligned around with Palantir. And that's what creates the thesis of the cult versus just like the stock going up. Dude, if this was about the stock, I don't think the community would be as big as it is. Like, it's not about the stock anymore. The stock is very important, but it's about the company winning. People actually believe in this company. And then if they win as a company, the byproduct is the stock tends to do well. If it was about the stock, people would have left in 2022. It was 24 months of being down 80% from the highs. I think people would have lost. People would have been gone. But people kept coming back because they felt there was something special here. And I think that's when the foundations of the community was formed. I'm happy that the community did not really form when the stock ran up to $45 in that meme run in January 2021, because it would have never been able to materialize, right? A community is formed, a cult is formed when you go through some really hard shit. And seeing Palantir at $6, at one point it was $5.95. That's like hard shit you have to go through, and that's what kind of toughens up the community to get through the hard times, you know. Where's Robinhood? Is Robinhood getting some momentum? I did not know we're getting those metrics today. Yeah, 2.67%. Dude, those metrics are going to be crazy. I think deposits are over $4 billion. If the equity and options volumes are again 20% higher, I mean, dude, Robinhood's about to have a blowout quarter if that happens. So let's see. We'll see that at 4:05 p.m. today and see when it comes out. Oracle's also at 4 p.m. So Oracle and Robinhood today. Those are going to be big results that we get. Elf's down 7%. Why are people so mad at Elf, dude? Like, what is going on? Is Ulta down today? Elf is just collapsing. Ulta's up 1.5. All right, let me do a search for Elf. What is going? Let me know in the chat if you own Elf and if you know what's going on. I know their makeup sales have slowed down a bit, but this thing now, Elf stock was up at one point like 40% year to date. Elf is now down 18%. Wow. Holy crap, dude. It started the year at 139. It got to 200. Now it's at 114. This is weird, dude. This is, I feel like something internally in the company is going on that's getting them upset. So Elf today, they partnered with Tinder to launch limited edition Put Your Elf Out There Vault collection, combining beauty innovations and exclusive products to boost confidence and ease first date jitters. Okay, this might be one of the dumbest headlines I've seen in my entire life, but I guess when you partner with Tinder, your stock falls 7%. What the heck is going on, dude? Holy crap. That is weird. Palantir 33.30, getting a little bit of a sell-off right here, but still up 9% year to date. Elf partners with Tinder to boost your confidence on the first date. Okay. That's, I guess the market is not impressed by that. Palantir right here up 10%. But yeah, I guess same store sales are slowing down for Elf. Something's affecting how the street thinks about their valuation. What's their market cap? Market cap is $7 billion. So it's, I think it would qualify kind of as a small cap. Price to sales of 5, PE of 33, only 56 million shares. What's the short float on ELF? Is it heavily shorted? By the way, Palantir short float is down to like less than 3% at this point. So the shorts are just not fucking with Palantir. Shorts, wow. 7%. That's not horrible, but that's not low. 7% is a decent amount of short on ELF. So you got the shorts that are winning right now in the context of ELF. Where's Celsius? Celsius took a hit last week. Celsius up 3%. Okay, Celsius getting some love today. Palantir still 33.29. Oracle 141. Snowflake 110. Coinbase 156. Mercado Libre 2014. Mercado Libre needs to do a stock split. It's time for them to do a split. HIMS up 3% on the day. Makes sense. Oh, wow. PTIR, that 2x leverage fund, that's up 20% today. About 52,000 shares traded. Again, I would still be very cautious of this. Palantir is up at a 52-week high. Usually that stuff, normalizes for a bit. So buying this thing up 20% on the day, probably, in my opinion, not the smartest thing, because it could come down, crashing 20% tomorrow if Palantir drops 5%. So I would just be a little cautious of engaging with the leverage plays on Palantir. Also, the liquidity in this thing is not good yet, dude. Like, there's not a lot of people buying and selling it yet. So I think it needs a lot more liquidity before you get better fills on it. Netflix 678, Amazon at 174. We do have a headline on Amazon. The headline on Amazon is Audible, which is their audiobook thing, will begin inviting a select group of US-based audiobook narrators to train AI on their voices, the clones of which can then be used to make an audiobook recording. So theoretically, you could invite Scarlett Johansson, and she'll read a book that'll train an AI on her voice, and then she could read any book to you. You could listen to Nancy Pelosi's new book in Scarlett Johansson's voice, theoretically. Did you guys know Nancy Pelosi is coming out with a new book? It's called The Art of Power. It's called The Art of Power. So it's going to be very interesting. She was doing a book signing yesterday. Here's a quick little clip of what happened at that book signing. It was very, very interesting. Here we go.
For Donald Trump to actually spend the rest of his life in prison. That's the only hope for democracy. Win the election. We do. Well, Nancy, listen. Last question. What stocks should I buy? Nancy, you're the greatest options trader of all time. I just want to know what stocks I should buy. But I just want to know, like, is the cost their biggest concern? Already. The police are implementing an institution of white supremacy and racism. I don't understand why they're even here at all. They should be defunded. I just want to know. She makes 6 figures a year in Congress and has $100 million net worth. Don't y'all want to know what stocks she should buy? Come on. No way. I just want to know. I want to know what stocks to buy. I want to close the wealth gap. What's the problem? No way. I just want to close the wealth gap. Nancy Pelosi, keep the greatest options trader of all time.
I thought this was kind of funny, dude. I'm not going to get into the rant I went on about this last night. It's at the end of the Sunday Future stream, like the last 5 minutes. But I analyzed that clip in depth from a philosophical perspective. We used John Baudrillard's thesis on simulation and simulacra in the combination of hyperreality to analyze what happened. I know, super random, but it was one of those things last night. If you want to check out that rant, it was kind of interesting. But yeah, he kind of had no kind of regrets and just went up and started asking her about options and what stock you should pick. I thought it was funny. I thought it was pretty funny at the end of the day. Palantir right here, 33.58, up 10.7%. So we're getting some of that 33.50 momentum back. We dipped to 33.20. Now people are buying. Wow, 43 million shares, dude. 43 million shares have come in for Palantir right now. Chris CRM says, hey, Amit, so there's no FOMO. What are you hearing? Many stocks this far post-IPO bottom tend to see one major drop of 30 to 40%, which puts Palantir down into the 16-22 range before running back up. So this is a really good comment from Chris. I know no one wants to see Palantir go back to 16.22, and I know it would be kind of crazy to say, hey, Palantir would go back to 16. However, in the midst of all this euphoria, it's good to be a little level-headed. Tesla, after getting to the S&P 500, fell 60% after a couple years. SMCI is already down 60%. CrowdStrike fell 40%. So would it be crazy to see Palantir fall 60% from here? No, it actually is very Amazon, the amount of 40% drawdowns they've gone through since 2014 to be able to get to where they are. It has happened. I just don't know what the catalyst would be for taking them down because they're reaccelerating growth. The one way I think Palantir can tank like aggressively outside of a recession, which all bets are off the table if that happens, is if they stop reaccelerating. So let's say, for example, they printed 27% growth last quarter. Let's say they do 29% this quarter, and then 30%, and then 32%. And then in Q3 2025, they do 24%. That's where I think you would see a massive like drop, because then people would get like, oh, what's happening? But if they have a good explanation for why they're deaccelerating on one random quarter, and it happens, right? It happens for companies across the world. I think people would buy that dip. The problem now with getting back to the 20s on Palantir is that people are so ready to buy the dip. This is the issue, right? So it's like the way we got back to $20 was an entire Japanese meltdown on August 5th. That's what took us down. To get there again, you would need the broader stock market to crash, which then all bets are off the table. But independent on the stock, I think you would need a lot of people to not buy the dip in case we fall 20, 30% off of like a bad earnings. And I don't think that's the case. I think more people would buy the dip because they know what they're going to hold for the long term. And then when the company signs 5-year extensions with BP like they did today, again, it just makes you think that momentum is not slowing down anytime soon. So is it possible to fall back into that $20 range? Yes. I personally wouldn't count on it right now, but then again, you kind of don't know how the market will play out. Max 7 right here. Everything is green. NVIDIA and Tesla are up 3%. Even Amazon's up 2%. Microsoft's up. Meta's up. Wow, Meta back at 508. Not bad. Meta was almost below 500 last Friday. Apple is down in anticipation of that event we have coming up in a couple of hours. Palantir hit a high of 45 in 2021. Yeah, but that wasn't a real high. I never thought the 2021 highs mattered because, again, interest rates were zero, dude. So, like, NEO, that's a $4 stock right now, was $60. Like 2021 prices were not real at all. You know, so I think now the growth has been more real and it's not based on just hype. Some of it's hype, but I think a lot of it's more tangible. In 2021, it was just pure money that had nowhere to get a return. And so it would go into anything. And Palantir was one of those names. Let's get a little bit of an update on the consumer. So I saw this chart today that was very interesting. I did not know what the United States Red Book Index was. But I did some research on it this morning. The Red Book Index is a weekly economic indicator that tracks the sales growth of general merchandise retailers, primarily focusing on same-store sales growth at large chain retail stores in the U.S. It is a measure of the performance of retailers in the country, offering insight into consumer spending and the health of the retail sector. It was up 6.3% year over year for the week ending August 31st. This was the best beat. This was the best weekly reading year over year since 2022. So, I mean, look, everyone says the consumer is strapped for cash. The consumer is struggling. They're going to have no money to buy products, recession. When you see stuff like this, unless this is also lying, just like the jobs report, I mean, I don't know. I don't think this could be lying because it's taking an aggregate of actual sales data. I don't know how you can fake that stuff. The consumer spending, dude. I went to Macy's this week, yesterday or Saturday. I was spending to buy some clothes. People were packed in Macy's, dude. Like, people were spending, they were shopping. I went around the mall. There were tons and tons of people. Like, consumer spend has not gone down the drain. Maybe I'm in a bubble in New Jersey. It's a little bit more of a city area. But so far, based on a lot of data I'm looking at, the consumer is definitely spending. The question is just going to be how sustainable is that spend? Palantir back to 33.75. I think it wants 34, folks. I think it wants a chance to get 34 again. Let's see if it makes a run. Robinhood right here at 1945, but it is acting like it wants to get to 34. Let me check the resistance at 34. The price action today is just phenomenal, folks. Just amazing. 34 is 26,000 shares. So about 30 grand, 30,000 shares waiting at 34. It's not a lot, to be honest. It could get eaten up. Just got to see if it can play through. 33.75 right here on Palantir, because consumer spending is volatile. Well, that's true. And you know, one of the arguments could be that we are in back to school shopping. We're in the Labor Day weekend stuff, all that, or that was last week. Like, you have all this stuff going on that potentially is why consumers are spending more. So yeah, there could be seasonal variations to it. But look, if Q3 earnings is after back to school and back to school shopping and, you know, all that stuff factors into more retail sales data, then company earnings are going to be good. Now, if they guide for a crappy Q4, yeah, stocks can take a hit. But if companies don't guide, if Walmart, Costco, Target, Lululemon, Airbnb, Abercrombie, they don't guide for a crappy Q4, and they didn't guide for a crappy Q3, then I don't know if the market like sells them off the fear of a recession. Like, I don't know. So this Q3 earnings cycle is going to be really important. It's going to be starting in mid-October. And we'll see how companies are guiding. 33.85 on Palantir again, trying to make that run back to 34. Let's see if we can get there. How's our girl Kathy Wood doing with this Palantir news? Okay, so this is really weird. Speaking of Kathy Wood, when you bring this up, so I got a message today from Arnie. He sent me a LinkedIn post of this dude that works at ARK, Raul Bushon. He's the managing director of the Europe and global head of index at ARK Invest. This is, look what he posted. First of all, so this is the meme that he posted. Palantir joins the S&P 500. We love it. Wonder what else Alex Karp can't do. This is a great meme. However, this meme is from my boy Iliano. It is not his meme, and he stole that meme without giving credit. So first of all, the dude took the meme, all right, which is just unethical. I'm just being hyperbolic here, but still, he took the meme. Second of all, it's funny because ARK sold 33.7 million shares of Palantir. You might be saying, hey, Amit, how do you remember the number? Because I was there, and I remember that shit. And she took a $425 million loss on the shares, and she bought Roku. If she had just held and just bought the dip, and it's not like she doesn't know how to buy the dip, she buys the dip on pretty much everything besides Palantir. Dude, ARK would probably have outperformed a lot of ETFs, but unfortunately, ARK is down aggressively this year, even though this year has been great because she got back into Palantir at like $9 or $10, which is good, but she doesn't have nearly as many shares as she had when she sold out of it. So 33.94. Let's see if we can break 34. We got 30,000 shares on deck to eat up. Let's see if we get there. But it was very interesting to see ARK tweet, oh, I wonder what Alex Karp can't do. And at the same time, you know, they just didn't have faith in him when the stock was at $6, which I get. It's an ETF. It has to but like my thing with ARK selling Palantir is like, I understand the rebalancing and you have to make decisions, but the decision was to buy Roku. Like if you had to buy anything else that was like Tesla, like I would at least understand it. But they bought fucking Roku. That's the part where I'm just like, what? That's the part where I just don't trust Kathy's research. And again, I respect Kathy a lot, but I really have a hard time trusting her team of research experts because I don't think if you did any, how are Arnie and I able to realize Palantir at $6 or $10 makes more sense, but ARK's fancy research team that probably gets paid millions of dollars a year in salary can't figure that shit out, dude. That's embarrassing. I'm sorry, but that's embarrassing. You got YouTubers and people on Twitter analyzing Palantir better than the highly coveted ARK research analysts. So now they're going to have to buy higher if they want more exposure. They're going to have to buy higher. I feel like our thing with Palantir is philosophical. All our funds are passive in Palantir. You need to be hawkish on the global stage. Yeah, but that's ignoring the commercial aspect of the business. That's a good point, Riley. But I think they ignored how fast commercial could scale. Granted, they didn't see AAP boot camps coming, and neither did me or Arnie. But it's not like we sold. We were kind of just like, well, we hope Karp is going to figure it out. And that's where you have to get deeper into the company. Like, do you think these guys can figure it out? And if you think they can, you got rewarded. But if you were just super bearish and you thought they were just a government contractor, which is probably why ARK sold at the time. Oh, that is the reason they sold. I remember Brett Winton, he went on Meet Kevin's show and he said, hey, we think they have way too much competition in the government business. That was absolutely false, by the way. And we think there's other vendors that the government is going to go for. And I remember hearing that at the time and I was like, dude, you think you sound smart, but that's like kind of stupid. Okay, back at 34, 30,000 shares are gone. Let's see if we can hold this thing. 34 up 12%. Let's see if we can hold it, folks. We got to get to like 34.10, 34.20 to really hold it. Otherwise, it's going to be very jittery. There's a lot of people selling right here. A lot of people taking some profits, but let's see if we can crack 34 Dolores. Let's see. Sam says, hi, Amit. I've been in Robinhood since $10. I just added $25 calls for 2026. I think amazing risk reward on these leaps in a low interest rate environment. I can see 35 plus, so much market share to grab. I 100% agree with you, Sam. The only caveat to this is if we have a recession. Otherwise, I think, yes, Robinhood is easily $25 to $30 by January 2026. I think it's $25 by the end of the year. However, I cautious that with saying if we get into a recession, unfortunately, Robinhood just will not be able to maintain momentum because, you know, people are not going to be trading as much and the market's going to get super bearish. If we avoid the recession, yeah, I think the way they're growing and the innovation and the speed, they're going to be doing, I think, an annual summit every year, which means new products every year, kind of, you know, taking shape after amazing companies that have done keynotes every year. I think they're going to be a monster, dude. Absolute monster. But we got to see how the market reacts to the Fed cutting rates. 33.99 right now. So we're just hovering at 34, trying to get there. And it's kind of teetering and tottering, but let's see if we can hold on to that level. Let's see. Do you think a recession is likely? No. I've been on the camp that I think it's not likely. I think the consumer spending and the job growth, we're not firing people. We're just not hiring as much. And I think rate cuts helps us save some of that momentum from the economy getting worse. But then again, dude, I don't know how the market's going to interpret the rate cuts. I think they're going to interpret them in a bullish way. I could be so wrong. It's hard to predict it. I don't know if Trump gets elected, does the market actually like that? If Kamala gets elected, is it like, I think we got to wait till after the election to really figure out what's going to happen. But in general, the reason I'm not bearish on the market is because earnings growth is amazing, and earnings growth justifies the multiples on these companies. And these companies are not getting bullshit multiples. If you do bad, your stock falls. If you do good, your stock goes up. So we just got to see if they can continue maintaining the momentum. $34 again. It's like going back from $33.99 to $34 like 5-10 times back and forth. Literally at 34, there are so many sellers, but then there's so many buyers at $33.95. It's like it can't really make up its mind right here at $34. Amid, have you bought the one share needed to? I haven't bought the one share. Oh, now we got a breakout. It wasn't at $33.99 for a long time. Usually you buy the one share when it's stuck for like 2 cents, but it just bursted through 34 every time it got to 34. And so haven't needed to buy the one share today. Okay, now we're getting a little bit of growth. Now we're getting some momentum, folks. Now it's holding on a little bit. Now people are buying at 34.02, 34.03, 34.04. We just got to see if it holds on. Now it fell right below 34. Yeah, it's volatile today, dude. It's volatile. I know we're being greedy right here, wanting 34, but even if we end, at 33, I think that's going to be really, really exciting. Thank you for the $2 super chat. Rate cuts are so bullish. I agree it's bullish. I just don't know if the market's going to think it's necessarily bullish. So we've got to see. Again, the CPI data will have a little bit of color. I do think rate cuts are good. It is definitely priced in. So I don't think it's going to be like some massive news where the market pumps. But as long as the market doesn't think, hey, the Fed's cutting because they're afraid of the economy weakening, then I think rate cuts ultimately get priced in more aggressively as very, very bullish. IWM small caps rallying a little bit, up 1%. Robinhood 1952, Oracle's up a little bit. Rocket Lab up 6%. Wow. Rocket Lab getting some love. SoFi's up 3%. Nvidia 106 up 3%. Tesla's up 4%. Google's up a little bit. Bitcoin 55.4. S&P up 1.08. Not bad. NASDAQ up 1.3. Not bad either. MicroStrategy up 6%. We're getting some green, folks. Even SMCI fell 30% last week, up 4% on the day. Bitcoin ETF, 2x leverage. That's up 7.3%. Broadcom's up 1.3. Costco's up 1.4. Enphase up a little bit. Regional banks up 1.3. I think regionals are going to do great when we get rate cuts. Market's green. I don't see a lot of reds. Dix is a little red. They had an okay earnings. Elf Beauty is red, and then DocuSign is red. I don't see a lot of other red besides that. Palantir right here, 34.04, up 12.2%. Rate cuts are bullish as long as CPI continues down and unemployment stays low. Exactly. And as long as that happens, I think it's going to be in a good situation. Dow's up 400 points. Yeah. Is Berkshire up? Berkshire is green, 1.12. That's great. And then the Dow is also up 1%. You got everything green. Got a little bit of a rebound so far. We'll see if 1030 hits us with the 1030 smack in the face. But so far, it's a nice rebound from a pretty disgusting week that we had that ended on Friday. So let's see. The Wall Street Journal, we didn't talk about this last night. The Wall Street Journal did come out with an article on Tesla. It's really not affecting them. But the article was basically accusing Tesla of misusing funds via XAI. And the article was like, oh, Tesla is going to license XAI's technology to Grok or to FSD. And therefore, Tesla's going to be paying XAI. And obviously, whether or not you like that idea, it does look a little bad, right? Because Tesla paying one of other Elon startups, even though it's for a real reason, a lot of people could be saying, hey, this is kind of wonky. Elon responded to people tweeting about this over the weekend. And he said, obviously, it is fake news. He says, how many fake articles have you seen about Tesla at this point? 100, 1,000, maybe several thousand. Wall Street Journal is talking nonsense. So Elon right here trying to kill that rumor, basically saying that's not happening. And I don't think it's a horrible idea, Tesla paying XAI if they're getting real value from it. But I do think the perception definitely to Wall Street could be that Elon's just fueling XAI's revenues via his other company. And that could cause a little bit of, improprietary decision-making that people could be thinking about. So from that perspective, it could look bad, but Elon said the Wall Street Journal article is fake. And probably not going to be that big of an impact. Riley says there is a shareholder proposal. I signed it for us to invest $5 billion in XAI. I don't hate that idea. I think getting a part of XAI is very bullish. Even though XAI, has not fully proven itself yet, I do think that the potential of it is massive, especially if it's the brains of FSD, Optimus, Grok, etc. And I think Tesla has $20 billion in cash. Instead of doing a buyback, $5 billion in XAI, not the worst thing in the world. That's not the worst thing in the world at all. So I don't necessarily hate that idea. Adric says he's up 20,000 in a day. Well, this is what happens sometimes, dude. You hold on to a company for a long time and you get to see some momentum. Shout out to the people that bought $15 calls or $10 calls or $20 calls that are expiring January 2025. I didn't do that. But if you, when Palantir was, basically $8 to $12, if you bought those leaps into January 2025, dude, you are doing great. And if you haven't sold them, which it doesn't make any sense to sell. I mean, you're so deep in the money, you kind of wait until expiration to really get some good gains. You've done very, very well. I didn't do that with Palantir. I did do that with Robinhood. So when I saw Robinhood at 8, I was like, you know what, this is stupid. I'm getting leaps for like $20. With Palantir, I didn't do that when it was $8. I didn't understand, honestly, I didn't understand options that much. But for those who did, man, it's more stupid, in my opinion, when a stock is extremely undervalued and there's asymmetric returns. It is more stupid to not buy the call options than to just buy the stock, because there's so much risk to reward that it makes sense at the end of the day to engage in the options. Now that doesn't happen all the time, but when Hood's at 8, when Palantir is at $8, that's when the opportunity. Obviously, you have to be right on the direction, but if you're right, the returns are literally thousands of % based on your timing versus hundreds of % or tens of % if you're able to time it correctly. So that's what we got on Palantir. 33.92. Again, I think it's going to waffle between 33 and 40. Or sorry, not 33 and 40. 33 and 34. If we waffle between 33 and 40, I wouldn't be mad about that. But yeah, I think 33 to 34 today. It might drop all the way back down to 33. If we go down to 32, then we're probably having a little bit of a market-wide sell-off, but hopefully a close above 33 is very possible today on Palantir. Robinhood 1950, Celsius 33.09, Berkshire Hathaway at 463 on the day as well. I sold Palantir cover calls for Friday, but then immediately chickened out and bought them back. Hey, that's a good thing. That's a good thing. That means you ultimately are, stopping yourself from getting into too much pain, even if you took a little bit of a net loss on that. Again, at the end of the day with covered calls, it's not a bad strategy. I think if you're really going to do covered calls on Palantir and you have 10, 20,000 shares, you should be doing covered calls on a certain amount of the shares, because you never want the whole position to just go to waste in case you get called, unless you're doing super out of the money. Like if you're doing $40 covered calls for next week, yeah, I don't think Palantir is going to be $40 by next week, but you're not going to be getting a good premium. So, the risk to reward isn't there. But if you're doing 35 and you're sweating at your keyboard at 3:30 on Friday, I don't know if it's worth it, bro. Especially when the stock is in an uptrend. It's not in a range. It's in an uptrend. Covered calls on SoFi makes more sense to me, because although it can break out and get to $9, $10 or whatever, it's been stuck in a range for a while. So you can kind of have some confidence that it's going to be capped at a certain level. Palantir is proving every single week there is no cap. And it continues to get momentum. Daniel says the thing is Hood was around $10 for about 2 years. If the timing is wrong, even your leap calls get completely wiped out. That's a good point. If you bought leaps on Palantir for 2022 expiration or 2023 expiration, you got wiped out. So the timing of it is very important. That's a very good nuance to what I was saying, because at the end of the day, you do have 2 years, but if you buy the 2 years in 2021, by 2023, you're wiped out. If you buy the 2 years in 2023 going into 2025, you get to make a lot of money. So the timing of it, and that's why analyzing the macro is important. The reason I bought the leaps on Hood is because A, I saw crypto was coming back, and Robinhood is a sleeper when it comes to crypto. And then B, inflation was coming down. So I was like, wait a second, if inflation's coming down, the Fed's going to cut rates. Robinhood's not going to be worth $8 if they're massively growing. And so that's why it makes sense. Now, I didn't expect them to have all these crazy events and the gold card and all that shit. I had no idea that was going to happen. But, that continued to add a ton of momentum to Robinhood as well. 33.97, still teetering with 34. But it seems like it's going to teeter for the rest of the day right here on 34. Palantir is going to be in the S&P 500 on September 20th, Joseph. So it's not in the S&P 500 today. It'll be in the S&P 500 on September 20th. I'm going to try to do some math and talk with some people on the weighting of Palantir, because I've seen a lot of different kind of analyses on what the weighting of Palantir would be and how many shares would have to be bought. I think from what I heard, about 240 million shares have to be bought to equal out the weighting into the index by fund managers, which would take off 240 million shares from the free float. That would make the institutional ownership go from 945 million shares to about 1.1 billion. I might be wrong on that, but that's why you're seeing this 12% surge, because people know that, hey, the buying is going to start. And so that's why people are, kind of front running some of the buying. But I'm going to talk to some people and try to get better analysis on that. And in a couple of days, I'll try to see if we can get the exact math on what that looks like. Okay, let's see what else we've got going on in the broader market. So I'm going to be having that CEO that I told you about join soon. I think either at 10:30 or 10:45, maybe at 10:30, potentially 10:45, but he will be joining today. And I think you guys are going to enjoy the interview. Will be about 30 minutes. Again, his company was one of the most important companies in 2022. Still an important company, not used as much, but a very important company. And I think he's going to give us a lot of insights that are very interesting around the markets. That's what I'll say. I don't want to give too much away, but it'll be pretty interesting. Let's get an update from RBC, what they think about the markets, where they think the markets are going, and then we'll keep going from there.
Now is Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Do you expect this to hold for the week, for the day, or do we go back into sort of the feelings we had last week?
I'll be honest with you, I'm not bearish on the market by any stretch. We've got a 5,700 target, but I was a little surprised to see the green on the screen this morning. We've seen the AAII sentiment indicator continue to sort of hover around levels that tactically tell us we need to have a bit of a breather. We've obviously got a lot of election uncertainty, which you guys have done, a tremendous job of digging into. And then seasonality. September's been a terrible month in each of the past 4 years for the S&P 500. So I think that we are probably due for a little bit more of a breather, but I'll enjoy the day. 5,700
by the end of the year?
Yeah, and it's, it depends on kind of which day we are on the market. Right now there's a little bit of upside. Some days when we've been at the recent highs, right, we've been just a few points below that
well
number.
Above where we are right now. So that means we get through October, we get through the election, and then we end up almost, 8% high or something like that?
Yeah, well, you typically do see markets sell off in September and October of a presidential election year, and then you usually get a rebound. And, the great thing about it from my seat is it really doesn't matter who ends up winning. Just the passage of the event does tend to give some relief in markets, just the alleviation of the uncertainty.
And you wouldn't position your favorite and unfavored sectors any differently based on the election?
What's really interesting, Joe, I've been talking about the election for a year and a half almost. European investors in particular have really been focused on sector playbooks for quite some time. Mm-hmm. One sector that we're overweight typically does well, I think in 7 of the last second halves of presidential election years, it's financials. And I think what happens is that when you go into a presidential election year, you have 2 candidates that go and sell their vision of the economy. One of those candidates ends up winning, right? They've done a better job of selling their vision for the future going forward. Financials do tend to be a sector that trade very much in tandem with consumer sentiment trends. So I think financials tend to cue off of that. But if you zoom out more broadly, second half of presidential election years, you tend to not want to be in defensive sectors. Areas like healthcare, staples, utilities tend to underperform. Old industrial areas like industrials, materials, to lesser extent energy, but those cyclical parts of the market really tend to do well. So we've been pointing to a lot of people to that playbook.
So you've been buying financials based on
We've been overweight financials. We've been, we've been looking for this rotation from growth to value for quite some time. We've said there's some advantages, right, on the growth trade that have made that rotation difficult to take hold, but it is finally getting underway. Financials are also a big benefit of that. We've been waiting for this trade for a very, very long time, and it's finally playing out.
And lower.
I don't think it's horrible to go to growth to value, especially as the market rallies and broadens out. However, it's going to be a question of how deep can Q3 earnings put up numbers for, because then growth, I don't think is going to do too bad, especially the Mag 7, if they have good growth. If they don't have good growth, then I think we probably see a rotation into value, but that doesn't mean the broader indices take a dip. That just means, Meta doesn't go to $600 by the end of the year. Let's also get an update here on the Apple event that's happening in a couple hours. Again, I won't be live streaming that, but I will be tweeting about it, and we'll talk about it on the market close today.
Odd one, and we'd love some color from you. This feels like unveiling something that doesn't exist yet and might not exist for a number of months, maybe even quarters. Can you walk us through how odd this product unveiling actually is?
Yeah, that's an accurate framing. I mean, the most bullish on the street see a super cycle, right, where they believe tangibly the consumer is ready for artificial intelligence on device. But the plan is as follows. We'll probably get 4 variants of the iPhone 16 generation unveiled today, and they'll start shipping at the end of this month. But as is now well documented, the supporting software through iOS 18.1, in other words, the update that gives you access to Apple's artificial intelligence tool, is staggered, delayed into October. And so there's actually a really interesting element of sort of misunderstanding. For example, the bulls on the street who see the super cycle are very excited about handset upgrades in China, driven by enthusiasm for AI. But as you discussed with your guest earlier, Apple is not making Apple Intelligence available in China in the first instance, pending regulatory approval.
And it is sort of this curious thing. How do you unveil software? It doesn't have the same sort of sexiness as something that folds or something that's got new corners or whatever usually the hardware that they unleash is. How are they going to make a software update that you can't get until next year sexy?
Yeah, I think the story for everyone around the world is, if I'm an everyday consumer, how do I actually use this technology? The beta version of iOS 18.1 has given us a clue. It's text summarization. Some of the reporting from Bloomberg is that it's the image or image generation functionality that's delayed. A lot of that plays itself out on social media, right? It's pretty easy now to create a meme. I had dinner with a let's call them a tech CEO last night. And what I found so interesting is, again, Apple Intelligence isn't going to be released in the first instance in Europe out of concern for some of the regulatory pressure there. But actually in Europe, the consumer isn't as interested as they are. It's easy for me to sit here in Silicon Valley. Literally, I have every generative AI tool under the sun installed on my phone, but that's culturally in line with what goes on here. There's a simple story that needs to be told in markets around the world. This is how you use AI on your device daily, and this is how it will impact either your work or your personal life.
I agree. I think there is an argument that needs to be made around how it's going to use or implement or interact with your day-to-day life. And I don't think Apple has really presented that argument yet. Maybe they do today. But until they do, I think no one, as Arnie says, is going to care about the AI phone. So today's event's going to be really important, dude. It can't just be a new phone. Palantir's still at $34. 1030 is here, folks. We're not seeing a huge 1030 sell-off yet. A little bit on some stocks, but Palantir holding up kind of okay at this $34 level, even though we're at 1030. We'll see what happens over the next hour. But yeah, Apple's going to need a real reason. Put in the chat if you're upgrading. Are you upgrading? I upgraded to the iPhone 15 Pro Max last year, and I traded in my own phone, so I only paid $400 for it, which is relatively cheap for a new phone, $400 versus like $1,200. But I'm curious if other people are upgrading this week. Google takes a hit. Interesting. Are they the only Mac 7 taking a hit besides Apple? Yeah, Google and Apple down. NVIDIA, Tesla took a hit at 1030. They got red candles, but they're still green. Again, 1030 every day, dude. If you're trading, 1030 is like that timestamp every day. Meta fell a little bit. Microsoft fell a little bit. Apple and Google are actually red. The DOJ antitrust lawsuit is starting today. So there's going to be a lot more stuff that happens in regards to updates on if they actually get broken up or not. But I don't know, dude. I think Google's going to lobby their way out of getting broken up. I don't think they want to get broken up. I think it'll be really weird if they get broken up. Oh, one update on YouTube. YouTube is now censoring fitness content for teenagers in Europe. The European Commission has forced YouTube to not promote videos of, I don't even know how you want to call it, like I guess, photos of bodies that are like more fit or whatever, because their argument is that teenage girls and guys are having this false perception of health. And so that is officially happening over the next couple months. They are starting to do. Yeah, so this is the headline. YouTube's going to limit fitness videos for European teams due to self-esteem concerns. YouTube will soon restrict European teams' access to certain health and fitness videos, particularly those that idolize specific body types. The platform's decision aims to prevent teams from developing negative beliefs about themselves. The move comes after studies revealed that repeated exposure to certain types of content can harm body image and lead to eating disorders. What do you guys think about that? You got some people that say, hey, mental health is a real concern and YouTube has a responsibility. You got other people saying this is what happens when you restrict free speech. The censorship lords start to like compound, and now you're going to have the censorship of certain types of body type. I mean, it's a very hot topic. People in the EU kind of like this. People in the United States probably against this because another example of censorship, but curious what you guys think. Curious what you guys think on this. It is very interesting. And again, I think the only reason they're doing this, they're not doing this out of the goodness of their heart. Notice the headline is for Europe. It's not for America. They're only doing this because of GDPR, because of concerns about Google's political affiliations in Europe. 33.96 on Palantir. In America, they're not doing it yet. At least so far, the United States has not forced Google to kind of take a stance like this. But in Europe, it seems like that is starting to happen. It was interesting. I saw the headline. I thought it was pretty interesting. I thought it was very interesting. I don't know, dude. Like, look, my personal perspective on this is, at the end of the day, if you're exposed to that type of content, and one way I think it's motivating. Like, if I see a guy on Instagram pop up with a 6-pack, I don't get insecure. I say, hey, I want to get there. You know, it's a reminder to me, like, hey, buddy, you got to work out even harder. So I think that's technically a good thing. I understand the concern that young kids are impressionable. And the impressions of some of that content could have negative side effects. But I also think you can't stop young kids from using the internet. I mean, the shit they see on TikTok and Instagram, like, as a parent, I do think it comes down to you protecting your kids and monitoring the content that they're consuming more so than the platform. But I understand there's nuance to it. I don't think it's an absolutist approach. I know there's nuance to this. But I think it creates a slippery slope, dude, because then it's like, you know, what type of content do we restrict from kids based on their mental health? And like, how does that impact overall content consumption? So I don't know. I'm surprised TikTok's not doing that. I don't know why YouTube's being forced to do it, but TikTok isn't. I would imagine like TikTok would have to follow suit because TikTok has a lot worse shit than YouTube on that. So there's a lot of nuance to it, but I guess we'll see how that affects YouTube numbers. I wouldn't imagine it affects it too much, but we will see if that has an impact on their broader consumption. What else do we have? What else do we have? You don't have kids, admit you don't get it. Look, that's a fair point. I'm being pretty humble here. I'm not taking an absolutist stance. There's some situations where I try to say, like, if I vehemently agree or disagree, I'm not vehemently agreeing or disagreeing with what YouTube did. I don't have kids. Maybe if I have kids one day, I would have to have a totally different perspective. So I get it. I understand. Right now, as a 26-year-old, it seems a little bit more censorship fueled to me. But I understand there is nuance here. And obviously people with kids probably have a totally different relationship with how they think the platforms are engaging, you know, with their children. And I do have sympathy that as a parent, it's really hard to get your kids off these apps. Like you can't, you might want to, but it's really hard to take their phone away from them. I mean, they're just going to hate you, right? Because everyone's using it. So it's a tough situation overall to deal with it. Okay, what else do we have? 544 on the S&P 500. Dell's at 106. S&P 544. Where's Palantir? Are we still at 34? We're selling off a little bit. Robinhood's selling off a little bit. I really did not know we're getting the Robinhood metrics today, dude. That's going to be exciting to see. Palantir 33.86. All right, there's your sell-off right there. A little bit of a downturn side. I think that CEO that I talked about, he's going to be on in 6 minutes. So 10:45, he should be on. And then we'll have that bit. But that will be happening in a couple of minutes. Let's look at the crypto stocks. They should be up today as well. Bitcoin's at 54. Wow, Bitcoin just fell. Damn it. Yeah, all the crypto stocks just took a hit. They're still green on the day, but Bitcoin was at 55.5 and now it's at 54.9. So it took a little bit of a hit. Coinbase 3%, CleanSpark. Let's add the miners ETF here. WGMI. RBSI. So now we'll look at the miners ETF every day on the crypto stocks. They're up 2.4%. Let's also add BitX. We should probably add that here. BitX is up 5%. The miners are up 2%. Robinhood's up 2%. MicroStrategy up 4.5%. On the day. Okay, cool. So let's take a look at this while we wait for our guest to join. Let me pull this up right here. Oh yeah, this is what I wanted to show. So we've got our boy Ted Cruz, who has some opinions on taxes. So let's listen to. We haven't heard Cruz in a long time. Let's listen to his perspective on what he thinks around taxes. See get his perspective, and then we'll have our interview in a couple minutes. Why is Apple going down? I think the street's selling off the event, and if the event is good, we'll see if we get more momentum. If not, then probably less momentum.
Authored the No Tax on Tips Act. It has support from both sides of the aisle. Joining us now, Texas Senator Ted Cruz. Senator, it's good to have you in. I think you're at a hostile audience here. I know.
Just on the tips.
Just on
that's
the
all
tips.
right.
Oh yeah, that's what I'm talking about.
I feel confident that y'all are not getting paid through tips.
We are
No,
not.
but I have.
We are not, but we might
Explain
ask to be paid in tips depending on how this goes.
Yeah, down the road, who knows, right? I used to work at McDonald's. No, wait a second. I guess I actually didn't, but it sounds good.
Well, you may be the next president,
yeah,
Joe. That's pretty good.
I-
That is a qualification.
I could be. Just explain what you do tell the rest of the world why they have to pay taxes on however they get compensation, but.
Well, listen, I'm not hearing a whole lot of people that are feeling grumpy that the waitress that the waitress at Denny's is not having to pay taxes on tips. You look at tips, it's people who are typically climbing the economic ladder. They're often just getting started, whether it's waiters and waitresses or taxi cab drivers or bartenders or hairdressers or people who work at a nail salon. They're folks who are struggling. They're not tending to make a ton of money, and the paperwork and the burden of paying taxes on tips, I think it's not justified. I also think, I think Republicans, we are and should be the party of blue collar workers, the party of jobs. President Trump came up with the idea. He announced it at the Vegas rally. And when I heard it, I said, that's a phenomenal idea. So I turned to my team, said, let's draft it. And, it says something. When I filed the bill within days, both of the Nevada senators, both Democrats, Catherine Cortez Masto and Jackie Rosen, came up and joined it immediately. And this is endorsed by both the National Restaurant Association and the Culinary Union. When you're bringing together all of the players, I think it's just a good idea.
Can I just lay out? And I understand where you're coming from. I get it. I was a waitress.
Yeah.
I earned $2.05 an hour.
Server, I believe, is the new.
I was a waitress and a bartender.
Server.
That's what they were called.
Yeah.
The reason I did the job was for the tips.
Did you wear flair?
No, I didn't. I know it was not at Fridays. But the reason I did it was because of the tips.
Yeah.
I made a lot of money.
Yeah.
It was great. My daughter was a waitress, server this year.
Yeah, server.
And made a lot of
Please.
tips. The reason that's a big complaint now is it was never something where it was really tracked before. So people were keeping that money and not paying tips. Now everything's electronic. You get paid out on your tips. And people are mad because they feel like they took a pay cut because they were never paying on the tips that were coming in before and weren't being tracked. My biggest problem with this is what it does for other employees who aren't. And I'm not talking a lot.
For those across the world, in the UK, Germany, do you guys tax tips? Are those taxed? Let me know in the chat.
A lot of others, but
Teachers, nurses.
I have a special needs daughter. They have aides who are one-to-one aides.
Mhm.
They make $16 an hour, maybe, sometimes less. And now you're going to have an incentive for them to go do other jobs, to go get tip jobs instead of doing the jobs where, it just creates, it's the unintended.
I forgot. There's no tip culture in Europe. I forgot. You guys are right. You guys don't pay tips. I forgot.
consequences.
Yeah, look,
what happens to that?
I get that argument, and I am a fan of broad-based tax reform. I think low taxes, you're mentioning different professions. Look, I think that's one of the big things at stake in this election and the difference between Donald Trump and Kamala Harris. The Wall Street Journal calls this election the $6 trillion election because that's the delta between how much taxes will go up versus going down or being cut more. You'll recall when I ran for president, I ran on a simple flat tax of 16% simple flat tax for business, 10% simple flat tax for families and individuals. I think simplicity is a great approach to tax reform.
All right, so that's the update on taxing tips. I totally forgot. Across the world, you guys really don't tax tips, but in the United States, tip culture is much bigger. 72% of you said no in the poll I just put up. 28% of you said yes. So it seems like a majority of you are against taxing tips. All right, folks, we have a very special guest joining the show. I got to connect with him a week ago or 2 weeks ago, and he somehow found the stream because someone sent it to him. Maybe one of you guys in the chat sent him the stream. He's been keeping up with the stream, enjoys the content. I am really happy that he's joining me today because we're going to talk about a lot of interesting things for the next 30 minutes. I think it'll be pretty insightful. His company is a very important company. It's a growing company. And in 2022, when we needed his company the most, his company showed up and he was able to be a source of truth based on what he created for all of us trying to understand the macro. Ladies and gentlemen, we have Stephen Rust, the CEO of Truflation. Stephen, what's up?
Hey, thanks for having me. Great being here and excited for this.
I am very excited to talk to you because obviously as someone who analyzes the macro every day, your website is one of the most important websites when we think about the macro. So I just want to get started before we kind of get into it. Who are you? What's your background? What's your background? Where are you from? And how did you even come up with the idea to start Truflation?
Yeah, so I'm serial entrepreneur. I have quite a bit of background in launching a number of companies. My first company was actually in the mobile space. There you go. In China, where I launched a mobile network in China and sold that to China Unicom. And then joined Sun Microsystems and got into software and found out there's this Java virtual machine that runs on all these mobile devices. And when the iPhone came out, everybody was trying to build out a developer ecosystem. And I had a really strong network in mobile developers and built out an agency that was helping companies identify different app developers around the world. Those app developers were all around the world, were spread out, and we were working for all the big tech companies, helping them find developers to build for their platforms, their app stores, or their SDKs, etc. And what we then found out was one of the developers came to me and said, "Pay me in Bitcoin." And I go, what's Bitcoin? And so I then looked up Bitcoin, got super excited about the Bitcoin, bought some on eBay using PayPal at the time.
2009, 2010?
This was 2012.
Okay.
So around 2012. And then paid him. But the amazing thing was it was around the other end of the world in Latin America. And it was instantaneous, no fees. And that was like, wow, when you had banks which took 5 days to transfer, you paid $700 in fees to wire the money across, let alone understanding what the complications were on the other side in the various different countries. Just that blew me away. And then I got so enamored by Bitcoin, the capabilities, peer-to-peer payments. I became the CEO of Bitcoin.com, scaled that to some 20 million wallets and 500,000 merchants, which I was working very...
How did that happen? Like, did the former CEO tap your shoulder? Like, how did you get the CEO of Bitcoin.com?
Pretty much, yeah. He tapped. We met at a conference and we just hit it off, and we were chatting. Pretty much everybody was around, and we were just sharing eye to eye. We had similar visions. We sort of said, I explored ways that we could work together. I still had a startup, so I couldn't just jump ship. But we found a way and a window that sort of said, look, let's try and find 3 deals in 3 months. We did 4 deals in 1 month working together, and said, this is going to go like, it's going to go crazy. Let's go. And so we then just found a way to work together. He was obviously the founder, so he actually did found Bitcoin.com, owned the URL, and was looking for somebody to sort of hand the reins over to. And I had the energy and the business development skills that he was looking for, and we complemented each other a lot on that journey, and it was wild.
So then about 5-7 years later, you get the idea for Truflation.
Yeah, I mean, then the governments, I mean, we were dealing a lot with merchants, right? So physical merchants that were getting paid. And largely we focused very much on emerging markets. So Eastern Europe that were highly familiar with what inflation does to an economy. We were working in Latin America, in Africa, and then largely in Asia. But then all of a sudden COVID hit and all these merchants had to shut down. Nobody was allowed outdoors. You had to wear masks. And so all of a sudden, everything changed. And then Powell came out and said, you know, inflation is transitory. Don't worry. We got you covered. No. Any economist, as we all know, would never take that for granted. And we looked under the carpet and we saw how this was calculated and how old the systems were, how entrenched they were, and how biased. And so that was for us just the red rag. Let's do an MVP. So I left, handed over to my successor at Bitcoin.com, and then just worked out and built an MVP. And we very quickly got support from Balaji and Sergey at Chainlink to get us off the ground, right? They wanted an on-chain oracle for all pricing data, and how could we capture payment data straight from the blockchain, which was transparent. Right. It wasn't that easy, but we managed to get to where we are today. We have 200,000 active users. We have 18 million items that we track, 80 plus data providers connected to the network. And yeah, we're now at the lowest we've been in a bloody long time, at 1.17%. So pretty accurate. We're always either too high above the government or lower than the government's reportings are. Why? Because we're faster, we're 30 times better, and we have way more data sets, and we update it every single day.
So, all right. So this is really amazing, and there's a lot to dive into. But in 2022, Jay Powell says, 2021, he says it's transitory. By June of 2022, inflation is reported at 9.9%, more like 15, 20% on the aggressive sides in terms of how you look at some of the metrics. And obviously, they did not have the real-time data to be able to tell us how bad inflation was. I want you to walk me through what was happening as inflation went up, the stock market was going down, so sentiment was horrible, and your website was reaching an all-time high in terms of traffic because people were using you guys as a source of truth. What was that like in terms of the growth curve for the company itself back in 2022?
So I have to shout out to a lot of champions and a lot of advocates and supporters that we got, right? Balaji's been an amazing supporter from the beginning. Chainlink's been an amazing supporter. But it was really when Anthony Scaramucci was at the World Economic Forum and really gave a huge shout out for TRUflation.com. And really that then just blew us up, and we hit the radar. And I think largely it was because of Pomp. Pomp introduced us to Scaramucci, and then Raoul Powell picked us up, and then just Danielle DiMartino picked us up, and constantly referenced us and did deep dives into our data sets. Michael Green picked us up. So we were just constantly being elevated from one level to the next over the course of a year. And we were on NASDAQ, we were on CNBC. We turned up everywhere. Just people wanted to hear actual numbers that were a reflection of what they were experiencing when they were at the grocery store, at the supermarket, at the gas tank, right, at the gas station.
Yeah, I mean, we use your website every single day to kind of see how or what the source of truth was when it came to figuring out what was happening with inflation, because no one believed the Fed. And then we saw the BLS revised job numbers last week by almost 1 million jobs. And it brings into question what the hell is going on in the Fed and why people like you are solving it. So that's my next question here. A, what is the problem with the legacy architecture to try to figure out how to aggregate data to give an accurate reading? And B, why do you guys think you can pretty much solve that problem?
So when we looked at the systems, they were done manually. They still today have 477 employees that go around to the grocery stores and track pricing on iPads. They track 6,000 households. They track 100,000 items, and they update it on a monthly basis. And so what we identified was there's a lot of online activities happening. So we could pull a lot of the data through APIs. number one. Number two, a lot of the at point of sale sites had scanners. They were scanning the prices based on barcodes and price data of that specific retail outlet. So we could pull that data. And so we started just aggregating this data together with different vendors, different providers, and that allows us to get real-time food and beverage update. Okay, it's not real-time, it's about a weekly. Food and beverage gets updated on a weekly basis. And they don't change that often or that regularly. But we can take into account special discounts, special promotions, all of those elements. We also pull, rather than just surveying 6,000 households, we pull from about 5% of the population on a census basis, the data in terms of how they are spending their money. That's an aggregate of 200,000 people a month going to our website and filling out the calculator. So if you go under, you'll find under resources, you'll find our calculator where people can go and fill out the calculator and work out what is inflation to me and how does that impact me. And so we've just actually managed to build that out more modern. We got a lot of criticism. Why do we need an alternative source of truth? We've already got it. The BLS does it already. There's trillions of dollars, $4.4 trillion in bonds linked to the BLS metric. So how are you, and what's your impact, and why are you important? And by just being faster and having more data sets, we are providing the ability to predict where the numbers are going to come out. And that's what really our first customer base was looking for in the data that we were aggregating.
Why are consumers paying you guys $20 a month to use the product? What alpha are they getting that's unique?
So they're trying to predict where the government's going to come out. With $20 a month, you're just getting insights in terms of different categories. You're then going to make bets on certain. So some people just use the data to then be able to buy stock in companies, or how the market or how interest rates are going to move. So they get ahead of the curve, and then they can identify where and how to buy and bet associated with interest rates. That's largely the biggest bet. And we see traffic spike always around this week and then FOMC meetings, right? It's just similar. It's just the normal thing. So people do use it to see where the BLS and the FOMC come out at.
Now, what's really interesting to me about Truflation's potential, because, let me ask you this question before I ask my next question. Do you think Truflation could be $1 billion company?
Yeah, I mean, of course. Otherwise, I wouldn't be doing this. I mean, I left Bitcoin. I left Bitcoin Cash. I left that whole ecosystem that I'd spent, large portion of my career building to do this. I really think that we have the ability to leverage the new rails that are being built for financial systems and be a front runner in that race.
So the reason I asked that question is because the enterprise side of your business seems like it's picking up as well. And so these are hedge funds and money institutions saying, hey, we'd rather leverage your data, and all these guys pay for is data. I mean, they pay for data in milliseconds that they can get better data. They have an edge in the markets. Do you think the enterprise side of the business can become pretty massive over the next 5 years?
Look, I mean, I was just in London when we finished our call. And I was in a room with, I must say, about 150 inflation traders.
What's an inflation trader? What is that?
I've never heard of that. They trade in what they call in the UK linkers, which are tips. In the US, we call them tips. In the UK, they call them linkers, which are inflationary linked bonds, right? And so that's all they do. They trade, and they're working at ginormous hedge funds that we all know and are household names in the investment in the investment sort of side. From State Street to Millennium to Citadel, they were all in the room there. Santander and a lot of more European side, trading European bonds and linkers. And so there was a huge appetite for new data sets, fresh data, fast data. And then how can I calibrate the data that comes from Truflation to that of what in the UK, the ONS is publishing, which is the Office of National Statistics, which is the BLS equivalent in the UK.
Are they as bad as the BLS in the United States?
They are. I'd say they're slightly better, but they're smaller, right? So they don't capture that bigger market. They are innovating in the sense that they are trying to use scanned grocery data, price data, and incorporate that. But they do that they have a 2-year cycle to take in innovation and change, right? And so, and then on certain elements, they have to go to a committee to get approval to do anything and change anything around retail pricing index. So they have to go to a committee, which then goes to government and parliament and gets voted on before they can do any kind of change. So you can just imagine the cycles and the timelines that are needed to do any kind of change, and how they're obviously linked to hundreds of billions of dollars that are tied in these loans that are impacting, obviously, Treasury. And so they don't necessarily want the truth. And that's why it's so flawed, because you have the same people deciding what measurement tool to use to then to borrow against. And we want to borrow, but I will decide what tool we use if we borrow, right? So it's like, it's just a lot of room for improvement. Let's put it like that. And we think we can do that.
You could argue it's obviously bureaucratic, and you could borderline say it's absolutely corrupt in terms of, how it interacts with each other. So what I'm getting from this is that data is the moat, data is the advantage. Your proprietary APIs, the way you look and aggregate that data, is why you guys are getting so much attention. So given data is the fuel for you guys, is there an AI angle based on your data? There's got to be an AI angle. You're raising money, right? You got to have an AI angle.
So I've been in the tech industry my whole career. I've gone through ups and downs and new platforms, new cycles, etc. So there's no way I'm going to sit on the sidelines with all of this data and not use AI. No, definitely. We use AI in a couple of ways. We use it very pragmatically, where we try to identify tools that can use to ensure composability of the data, so that we can recognize the type of data that's in there. We're using natural language processing instead of using survey data and going out and surveying. We're just recognizing what type of data is in there, and then how could we compose that into other categories and make it simpler to retrieve. The other element, prediction, right? We all want to know prediction. So how do we identify historical patterns, and how do they replicate themselves? Are they likely to replicate themselves? And how do we train the AI to be able to identify those? So those are some of the examples that we're working on. But productivity has been the first and primary tool and utility of AI for us.
So you wouldn't say AI is fake or AI is a kind of fad. You would say there's like a legitimate use case to it.
Oh, definitely. Oh, 100%. Definitely. Hands down. It's phenomenal. I mean, it's really helped our development team turn around code much faster. It's helped them take in a lot more data from a lot more diverse sources, right? So we're now taking data, and we've just added Argentina. So we track Argentina as for inflation data there. We've got the UK, we've got the US now. We're doing consumer sentiment. We're going a lot more into the labor market. We're going a lot more into producer pricing and activities and in production. What does that look like? And things like that. And we wouldn't be able to do that with such a small team and that vast library of data.
See, I think that's a really important question. I'm happy to get your insight, because we talk about AI a lot on the channel, because all of us are trying to figure out, is this AI thematic real? And with a company like yours that's operating day in and day out with trillions of bits of data, the AI not only helping the internal engineering of the company become more efficient, but then the actual aggregating of the data, the understanding and processing, crystallization of the data with natural language processing, all of that stuff seems to be a tailwind for you guys. And it seems to be a use case that is transferable to pretty much every single company in the world.
Definitely.
I want to ask you, so 2 more questions for you. Argentina, Milei has been elected. He has vowed to liberalize this entire country that has had to deal with hyperinflation. What work are you guys doing there, and what is the potential you see for Argentina?
So we started, I mean, we do the inflation calculator. We break it down into the same categories. In Argentina, though, you have a very different environment. You had You had multiple exchange rates to the US dollar. So we had to then go into the peso and just look at it native currencies. You have very small, for example, kiosks where a lot of people do a lot of shopping there. So 5% of food and beverage is gone through kiosks. How do you do that? You have different income brackets. You have different age groups. So we had to look at the demographics, income brackets across the nation, source the data, from different environments. And it's not as digital as it is in the US.
So how do you get it? Do you send people out to actually get it if it's not that digital?
No, we don't. We actually survey. We don't survey. We work with the universities there to capture the data. And there are digital sources. And so we just have to extrapolate a lot more. And then we go to grocery stores like we did in the US and scan the food pricing data. Automotive, you can get that data. But the thing is, we've been working with the Argentinian government as well. So it's been a bit more of a collaborative exercise. And right after we announced the Argentinian index, the government opened up 12 million data feeds publicly from the government. So now we're actually getting government data source. So their tech committee and group or working group that's set up under Milei sort of opened up and sort of said, we need to publicize these data sets. How do we open them up? How do we build a proxy server so that we can have an API? How do we ensure we know who's accessing that data with keys? And so we told them how we did it. And hopefully that had an influence in terms of where they decided to go. And now we have a vast amount of data that's been opened up all of a sudden. And I think they'll do much more, so much so that they've invited us to a conference in October that Milei is hosting, the Tech Forum. And so we're going to be sharing with them, meeting with the central bankers down there, and also with some of their universities, students that we're trying to engage and help us optimize and improve where we can go from here.
So I imagine politics is really important here because Venezuela is not inviting you guys and opening up the doors to 12 million data feeds yet.
Well, we haven't
because they don't have a leader. They don't have a leader that wants to liberalize like Milei.
Yes,
at least not yet.
You need leadership there, and I think with Milei sort of just trying to streamline, reduce the cost inside governments to streamline the business, and how do I have a better public-private partnership, and what does that look like? I think that framework, he's opened up the ideas in terms of how that could look, and could that evolve? What does that evolution look like? And what is the framework that I, as a government, need to put in place versus what can we allow the public markets to take on and do some of that lift for us? Which puts less burden on the taxpayer, more burden on the enterprise, but also forces us as a business to try and identify monetization opportunities and how we can convert this and what investment we want to put in this and what likely return we can get off the back of it.
I love it. I love the idea. I love the company. It is incredibly exciting. The fact that you guys are a source of truth. I mean, we need innovation like this to actually fight back against sources that are just not as trustworthy. Steven's Twitter right here is in the description. Steve, do you think the U.S. government would ever come to you guys and you guys could consult the BLS? Do you think that's ever something that could happen?
We've been approached. We filled out forms to become an approved vendor, but we also have met on the sidelines, and we've had a number of reports from independent bodies that are writing the importance of high frequency data, the ability to have real time price tracking. But we've heard through sidelines that it's just. Yeah, I don't think there's much of a desire to innovate right now in that. And if anything, they want to do the innovation, they want to invent it, and they'll work with their existing partners to build out their own technologies to try and do this.
Which is never going to fucking work. We know that. Right? We know.
You said that. I didn't say that. But I definitely. Yeah. Look, I mean, I think if you put your heart and mind to it, but you need to have a nimble stealth group on the side. And that's what I've seen, in my years and career, it's keeping work groups small. Jeff Bezos calls it the pizza box size, right? So keeping teams to the size of 2 pizza boxes, because if they're bigger than that, you don't have accountability anymore. You can hide amongst, sort of not doing the necessary lift in order to keep the velocity going, right? And, Elon Musk goes into demon mode for certain reasons, right? And if I give people 7 days to clean the room, they'll take 7 days. If I give them 7 minutes or 7 hours, they'll do it in 7 hours. And I think, how do we get to a model like that? And I think the team size is anywhere between 4 to 6 people, depending on the size of the project. And then you can get stuff done into an MVP. And then how do I continuously figure out to keep them at that size so that I can continue to innovate and move forward with that level of accountability?
Right. Yeah.
Which
makes a lot of sense. Makes a lot of sense. Truflation CEO, thank you for being here today. I've got to ask you one more question because it's my channel. And this is kind of how you were introduced to some of my content. But this company right here, Palantir, has had a little bit of a fun ride. Just any of your raw thoughts on the company and how they've progressed over the past couple of years?
Yeah, look, I really like Palantir. I think they were also a large inspiration for what we were doing, right? They have a public-private relationship. They were working with the government around helping them sort through a lot of the data to build a better nation. And I think that's really what we tried to replicate. And instead of going after the type of data that Palantir was going after, how do we do that with economic data and and sort of labor data, production data? How do we aggregate that sort of thing? And I really feel that Alex Karp and the team have done an amazing job, and get the credit they deserve. From a price perspective, I bought into them really early on, and I loved their early day movement, and then they just flattened out and held a price point. But then all of a sudden, the last couple of months, they've done really well, right? And so, I sort of missed this last wave, but if we're going to try and follow their footsteps and take Truflation on the same sort of journey.
I love it. Thank you so much for spending some time with me today, Stefan. Truflation CEO, Twitter in the chat. Everyone, please make sure to follow him and check him out. Really appreciate it. And wishing nothing but the best for Truflation.
No, thank you for having me. Thank you for picking up, and yeah, really glad to be here and love your show as well. I do watch it, and always through true insights as well. So thank you.
That was very humbling for me when you said you actually watch it. I was like, oh wow, that's awesome. And one of the things you said is we aggregate a lot of data on the show, and I think that's why you kind of like it, because Truflation is aggregating the data, and that's how I want the show to be. I want there to be a ton of data. So.
Yeah, but I think also we've moved away, and I think you caught on to this trend really early on, where we've moved away from mainstream media into social media. And I trust you more than I would trust any analyst on CNBC or anything, because they've got an agenda. They're working for somebody else. And I just feel that we now need more voices like yourself that can give me great insights with data and try to take it more factual versus just being biased and waiting for your bonus at the end of the month and trying to sell me something, right?
Right. And obviously be funny. I mean, you can't.
Yes. And be entertaining as well. We need to be entertaining.
Thank you, Stefan, so much. I appreciate it. We'll talk again. Thank you, man.
Thanks a lot, Amit. Bye.
Bye-bye. All right, folks. That was a fun one. Truflation CEO. As you can see right here, I didn't even know Argentina was at 199%. This is the first time I'm looking at it today. It puts into perspective our inflation of top line CPI 2.9% versus Argentina at 199%. So one could argue the Fed has done their job and they've gotten inflation to come lower, and that's why rate cuts are going to be super important. But when you take a look at what's going on across the world, it does put in perspective that America is doing okay, even if we are still trying to get inflation back down to that 2% range. All right, that is it for me. As Bay Ray says right here, Palantir's head of energy and natural resources, Matthew Babin, will be on Yahoo Finance today at around 3 p.m. We will probably watch that on the market close. So we've got a lot of stuff coming on the market close today. We've got Matt Babin, Palantir Energy. We've got Robinhood metrics. I didn't know that was going to happen. We have Oracle earnings. And then in about an hour and a half, we have Apple's event, but we're going to recap Apple's event on the market close. So we are going to have a lot of stuff to talk about at the end of the market close today. And we're going to have to break down all that stuff, what it means for the markets. And obviously what it means for the Fed. Quick look at Palantir before we end off the show today. Palantir right here, 33.74, holding 33. We're done with the 1030 sell-off. So we sold off from 34.13 to 33.72. I'll take that any day of the week if we close above 33.70. Robinhood here at 19.25, SMH at 2.16, Tesla 2.14, Google. Wow. Google's below 150. Holy crap. Google getting hammered today. We'll see how that plays out later throughout the day. Tesla right here at 214. NVIDIA is up 1.1%. Apple as well getting hammered down about 1.13. But the big story obviously is Palantir right here doing really nice at 33.70. NASDAQ as well is down or is up a little bit 450, but it is, as you can see, got sold off from 455 at 1030, almost on the dot. And then the S&P 500 is at 542. Was up 1.1. Now it's up 0.46, which is still green, but down a little bit from the beginning of the day. All right, we'll see what happens with Palantir on the market close. Let's do the word of the day, and then I'll be back in a few hours, and we've got a lot to cover on the market close. Word of the day is banish.
Banish.
This is an easy one. To expel from a country or place by authoritative decree. Basically means to get rid of someone. The council voted to banish the rebel leader to a remote island. The dictator threatened to banish all citizens who spoke out against his regime. Palantir's price action is banishing all the bears. Dude, there were some people on Twitter that were tweeting the day before S&P 500 inclusion, like these definitive absolute claims that Palantir is not getting into the S&P 500, like just straight up like Bill Ackman style tweets for why Palantir is not going to get into the S&P 500. They're starting to get banished, folks. Starting to get banished. There we go. Palantir, 33.70. I'll see you guys in a couple hours. Again, Oracle earnings, Robinhood metrics, Palantir head of energy on Yahoo Finance, and then the Apple recap for the event. So we got a lot to talk about and a lot to go through. Thank you, everybody. Hopefully you guys enjoyed, and I'll see you guys in the next few hours. Bye, everyone. Have a good one.